Right. Welcome, everybody. My name's Rodrigo. I'm going to be here with you today in this session with Mark Putrino, former hedge fund manager, traded right there with Steve Cohen, Mario Gabelli, multi-billionaires in the industry. A lot of you already know Mark. You already know Mark from the Benzinga Trading School. He's the chief educator at the Benzinga Trading School. So that's where a lot of you guys already probably know him. And in the chat, go ahead and let me know when you guys are ready to start. Couple shout outs here. Bill Troyer, Alex, Andrew, Donovan in the house. We got Dennis, Janice, Jim, Taylor. What's up, dude? Good to see you again here. Rodney, Ralph, Vito. A lot of familiar, friendly faces here from the trading school. I always love seeing that because you guys just can't get enough of Mark, right? So for those that were asking me where Mark was, Mark is in the trading school, right? He's doing classes all day there. He's got a live trading chat room. And he also has a trade alert that he just added to the trading school. We'll go over that in a bit too. So a couple topics we're going to cover today, folks. Mark Putrino's couple of trading lessons, right? Strategies, trade ideas, sector scoping, setups for equities, crypto, commodities, buys and sells, charts, market discussions, a whole lot of stuff here. And make sure that you do stick around at the end because we do have a Q&A and a real-time view of the Benzinga Trading School with Mark Putrino. So Raymond's good to go. Mary's ready to go. Raymond, MG Martin, what's up, dude? Good to see you. You don't miss one, right? And Raz, let's go. Bring ahead Mark Putrino from the Trading School. Let's go.
Hey, what's up?
Hey, man, how you doing? How was school today? How was the class?
It was good. It was interesting. We learned a lot. There's a lot to talk about these days with what's going on with inflation and the Fed meeting tomorrow.
Right.
But a lot of the market is set up to move. I believe it's going to make a decent move over the next few days. Whether that's up or down, I don't know. My guess is down, but we'll just have to watch and see. The reason why I say that, Rodrigo, is that we have some really important things sitting on important levels. Like, for example, Apple and Microsoft, 12% of the S&P 500 is in those two stocks. They're each sitting on clear support levels, which we can, of course, go through. So that's where our signal is going to come from. What's going to happen with the market? If Apple and Microsoft start to break the support that they're sitting on, we're going to get a move lower. If they can hold and start to move higher, then we get a move higher. So a big part of the philosophy of the class, or of what I like to teach, is that we have to let the market tell us what to do. We don't want to guess or have preset notions or things like that. So over the next few days, I think we're going to see something, after this Fed meeting and so forth and so on. So it should be an interesting couple of days. But as traders, this is what we look for. I mean, in a perfect world, the market would only go up. It goes down too, but we can make money when markets go up and when they go down. And a lot of people are interested in hearing how that works because they don't know they can do it. And you don't even need to sell short or have an option strategy and buy puts. There are these inverse ETFs you can buy that are just like buying a regular stock or an ETF. And if the market goes down, they go up. Right. So there's a lot of things going on, in the market.
Yeah, and I think it's great that you actually show traders how to hedge, how to do different things out there that typically, ends up in a call that I get like, hey, I didn't know you could do that. I'm new to trading or because a lot of people, when you get into the markets, everything is so new. And it's really kind of hard to really know what you need to know, right? There's a lot of information and you don't know what you need. So I think it's good that you give them all the information for them to become better traders. Now, before we do pop into what we got planned here, this is the trading school. This is what I'm showing you guys. It's the homepage. We have the video library where you can watch all the recordings. It has live trading chat rooms with Mark, Benzinga Pro. But Mark, this is the class from today, right? Investment psychology?
Yeah, today was investment psychology.
Okay, and I think it's great that you teach that. I think it's a sector that doesn't get discussed much because it doesn't matter what you're teaching, what lessons you go over. If the mental state, if the mental expectation of the trade is not there, then nothing will work. If you're a consistent gambler or if there's something else, right? You need to have the right mental expectations. And I think that this is why this class locks it all down, because the lessons won't work if you don't apply the investment psychology, right?
The market is all investment psychology. I mean, that's really what it is. It's people, when we look at the market, remember, there's always someone on the other side of the trade. And so it's a human ultimately. And humans are irrational. Think about I don't know, we could probably find a stock pretty easily. Like, is there a stock that moved 5 or 10% today? I'm sure there is. What happened at that company that caused the valuation of it to change by 5 or 10%? And the answer is probably nothing. Say it went up by 10%. Like, did they just get a new patent? Did they get a new contract? Probably not. What drives things around in the short term is investors' perceptions. So if you don't understand investment psychology, you're going to have a real hard time being successful at this. But if you do understand investment psychology, it's going to become much easier. I'm not saying you got to get a PhD in psychology, but you just need to be aware of things that happen, making emotional decisions and
Yes.
trading for the wrong reason and so forth.
Right. Like buying when it's high, selling when it's low, and then repeating that process. And it's all because of emotions, right? Instead of having a strategy, having a plan. That's very typical for new traders, from what I talk to them on the phone.
Yeah. I mean, it ultimately comes down to, a lot of people think that there's these secret systems, right? These secret formulas, like a guy like Steve Cohen or Mario Gabelli has the secret formula that works. And it just doesn't work like that in the real world. The difference between a guy like a Stevie Cohen who's really successful and someone who's not is that he understands how important the investment psychology part of it is. The biggest mistake people make is they sell their traders make is they sell their winners too soon and they hold on to their losers for too long. And, that comes from emotions. We talk a lot about paper trading in the class and the difference between paper trading and real trading. And the thing is the emotions, right? A lot of people have successful paper trading strategies, but when they actually try to apply it with real money, they end up not doing so well because their emotions overcome them. Like, for example, just say you have just to make the math easy, say you have a paper trading strategy and it tells you to buy 1,000 shares at $10 and your target is $15. All right, well, on paper, if you buy it at $10 and it goes to 15, it's like, oh, great, it's up 50%. What I thought was going to happen happens. I had a good idea, so forth and so on. Now let's look at it in the real world. So say you invest 10 grand in a stock and now it goes to 11, or, it goes up a point. That's $1,000. It's like, wow, $1,000, that's real money. Maybe I should, take it now, take my money and run. Then it goes to 12, maybe I should take my money and run. And not only can I make money, I can go tell all my buddies, hey, I made money, blah, 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 blah. So investment psychology is, really comes down to the core of, I think, the difference between success, it's not just investment psychology, obviously. If you understand like the basic principles that we cover in the class, like how to identify an important price level, what does overbought and oversold mean? And then you focus on these fundamentals, levels, trends, and momentum, and then you throw in like a twist of investment psychology, and that's the recipe for success.
Right. No, interesting stuff there, Mark. And I know I want to just finish highlighting here. I mentioned the live trading chat rooms. We have a couple. We have one where Mark is posting trade ideas, one where you can post questions for Mark. The other one is the student trade idea chat room. And I want to show you this because I've seen many students not just improve their trading, but also help other new traders. And that's a really good feeling when you're part of that community. So for example, Born to Be Free, great fellow there. He's going to the Vegas trip. Y'all should look into it, Fintuit. Born to Be Free says, hey, caught this day trade morning RBX, traded twice and profited both times, describing the trade. And you'll see students posting their research, their trades. It's a great community. I promise that if you're trading alone, this is really what you need. And then Mark, tell me a little bit about this new report you started doing.
Well, it's a weekly preview as opposed to a review. So it's not that ultra complicated. It's just kind of what we're going to be looking at in the market. And that was, okay, so you got the one with the bear. Yeah, about 2 weeks ago, if you look right there at the chart you're showing right now, this S&P 500 or SPY is the ETF that tracks it. The levels around 451 have been very important. So we got up there, and when we reversed, and I saw some other things going on in the market that looked to be bearish. That's why I decided to put the happy bear on the front cover. So, yeah. So, I mean, we look at different sectors. Like for example, if I was to write that report now for tomorrow, I mean, you got to watch where Microsoft and Apple are. And as a trader, this is kind of a good thing. It's not too often that you're going to have such an obvious, clear signal as having the two biggest stocks in the market simultaneously be at support levels. So, usually it's not that easy. One of the reasons why we got bearish, we really got bearish in November. The market's really been falling apart for a while. It's just that the ugly stuff goes down first, like all the Reddit stocks, the stocks that don't make money. Then the stuff that's, good companies but aren't doing so well, they go down. The last stuff to go down is the consumer staple stocks. And that's what's starting to go down now. But anyway, we've been bearish for a while. And we just could talk about that 451 level on SPY, which I'll just show you is important going back to September. When a market gets to an important resistance level and fails, which is trader talk for meaning it doesn't get through the level, a lot of times a meaningful sell-off follows. And I forget exactly when it was, but the technology sector this is probably 2 months ago, but we'll look at the chart, obviously, got to an important level, didn't get through it and reversed. And that brought the whole market down. And that's right around the time that the whole Ukraine thing started. And if you listen to the media or the pundits, everyone's like, Ukraine, 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 the market's going down because of Ukraine. We don't look at it like that as traders. We look at it as, no, this market's going down because it failed at important resistance, regardless of what would have happened, what was going on in Ukraine. That's not really affecting the stock market as much as people would lead you to believe. So anyway, after the sell-off, we go down, and what happened? Well, we basically said, this is where the bottom is probably going to be. The reason why is we identified an important level in the tech sector, which I'll obviously show you. And then the market started going higher. Now, think about it. You might think the market was going down because of what was going on in Ukraine, because that's what you've heard. But why would the market start going up after it reached that level if the stuff in Ukraine was still going on and even getting worse? And it's because the market is not driven by, it's very, very, very rare that there's some kind of a news story that can affect the stock market, right? If it's an interest rate thing, that can, but the vast majority of the big moves in the market happen because of the way a stock or a sector reacts when it gets to a certain how the market reacts when it gets to a certain level. That's important. So these are some of the things that we look at, Rodrigo. Which levels are important, what trends are going on, what's the momentum. Oh, okay. So there's our classes. So we have 8 classes, and it's important to understand we don't just have the 8 classes and then say, see you later. It's like a recycle thing, right? We go class 1 through 4, and then we have an open class on Friday, and then we go class 5 through 8. And in the classes, we cover things that are the important fundamentals, like, for example, levels. The thing I'm talking about now, what's a support level? What's a resistance level? Why do levels change back and forth? So the first part of the class, I don't know, first half an hour or so, we'll talk about the fundamentals, but then we actually look into the actual market and see where we can apply what we've talked about, where we can apply these fundamentals. And I think that's a big difference that makes this class, in my opinion, good, because a lot, like, you can get a book on technical analysis and, all it's going to be is, oh, I made this call, that was great. I made that call, that was great. Everyone's a genius in hindsight. So we cover levels, trends, momentum, psychology. And I think the kind of the format of the class is something I took away from my years of being in the institutional trading world. And it's like, all right, what goes on in the morning meeting? Usually the trader conducts the meetings in the morning because the traders are the ones who know what's going on in the market more so than the analysts or everything. But yeah, so we look through the markets, we see what's going on. We look for stuff that's overbought or oversold, or we're looking for stuff that the market is telling us, there's going to be something happening here. If something is just trading sideways and, it's boring, well, not, there's probably not an imminent move. So we look for things that have imminent moves.
Right.
And okay. Yeah. So you got
for those that are asking about the schedule. So the class schedule is as follows. So it's Monday to Friday that you're meeting, but Monday to Thursday, this is the schedule. 7 to 7:45, you have the lesson lecture. 7:45 to 9, you have the lesson Q&A, current market examples with Mark live. And then from 12 to 1, you have a lesson review and an open market discussion. Keep in mind, even though they're labeled and such, that doesn't mean we don't go over into different conversations. We don't look at the market. Students will talk about a certain ticker. Mark will take a quick look at it. And then Friday, you meet from 7 to 9. I did forget to mention one person that joins today that joins the trading school will win pretty much a fully paid trip to the FinTwit event in Vegas, which is in 2 weeks, where you can hang out with Mark and meet the rest of the folks there at the Benzinga team. So again, you have to join tonight, right, till midnight. So Mark, I know you have a couple of things you want to talk about. Chart you want to go over?
Yeah.
Yeah. Okay. Yeah. Go ahead and take over the screen.
That's why I'm here. All right. Let's see here. All right. So you see the S&P 500?
Yeah.
SPY. Okay. All right. So let me just go back to what I was just talking about with tech and this whole concept of let's let the market tell us what to do, as opposed to just, trying to put some crazy magical system together. So one of the things we look at are these sector spider ETFs. The S&P 500 is composed of 11 different sectors, and different sectors drive the market at different times. All right. So one day, maybe the financials are leading, the next day might be technology. Different things drive the market at different times. So if we kind of look under the hood at these different sectors, it gives us insight into what's going to happen in the broader markets. So these ETFs are, fortunately for us, there are ETFs that track these sectors. They're called spiders, or there's a lot of them, but we look at the spiders because they're the most popular ones. So anyway, I want to show you this technology spider here. The symbol is XLK. And we could talk about the importance of understanding how certain price levels are important. So basic concept of markets, basic, not even a concept, a rule, fundamental. Some price levels are more important than others. It sounds kind of simple, but understanding that is going to bring you a long way to making profits. You can trust me. So we're going to look at this sector spider, and this level here is 164, this blue line. Now look at this. The market went up and got through this level in November. And then each time it got back to it, hold on one second. Each time it got back to it, what happened? Well, it found what we call support, meaning it ran into some buyers and it rallied.
Really quick, Mark. This is a trade set up from the trading school.
Well, it's more of a theme when we look at these sectors. We look at the sectors to get a feel for what's going on in the market, right? That's like our step one. Then we look within the sector for potential ideas. Like some people might just trade XLK, but other people might be trading Microsoft or one of the other stocks in the technology sector. A lot of what we need to do is find where we get our biggest bang for the buck, so to speak, right? If this is down 2%, there might be stocks in the tech sector that are down 5%. Or if this is up 1%, there might be stocks that are up, by 5%. So we look at the different stocks. And that's something that we can go through too. But for some reason, this level was support. Now, look what happened. The market went down, or this ETF went down, rallied, and look at this, lo and behold, somehow the level that was support has magically turned into a resistance level to within points. I mean, you got to look at this thing as this thing trades how many tens of billions of dollars a day, if not more. Sorry, I got a little allergy cough thing going on here.
And really quick here, I just want to mention a couple comments here from the YouTube. Cypher says, Cypher never misses one of these. He's like, my favorite teacher, Mark, knows how much value I have from his wisdom and jokes. I join the class daily and I'm always willing to help the Benzinga Trading School. I always learn. That's Cypher on the YouTube chat, and Ali, my brother there on the Zoom, is I'm personally following Mark in the trading school since 4 months now, and it's been great. Great learning experience, and the members are also great to share ideas and drive discussions with Mark on the market. I think it's beautiful to see that, man, the impact you have on these traders.
Yeah, well, there's a lot of misinformation out there. So I could see why people are confused. There's a lot of quote unquote pundits who really aren't pundits. There's a lot of people, I think, that are trying hard, but they just don't know what they're talking about. I think there are people that are downright frauds. But let's go back to this whole thing with the levels here, right? And I'm going to show you how we called these moves with, not using a secret system or anything like this. One of the principles of markets is some price levels are more important than others. We can see that here. This 164 level for some reason is important. I mean, you don't need to be a chart guru to see this, or a big shot hedge fund guy. It's like, hey, it's pretty clear, right? So why does this happen? Well, there were people that bought here who, after it went down, regretted buying. So they tell themselves, I made a mistake. I want to sell this thing. I shouldn't have bought it, but I don't want to lose any money. So if it gets back up to my level I bought it at, I'm going to try to sell it. Now, Rodrigo, I would be willing to bet that probably 80% of the people who are listening now who have traded have gone through that. You buy something, you go down, you tell yourself, all right, I'm going to hang on to it. If it gets back up to my price, I'm going to sell it. And we can see that the manifestation of that in these charts. Support becomes resistance, right? So why is that important? Well, it helps us decide where we put our prices. Say, for instance, you bought XLK down here at 152 and you said to yourself, oh, I like XLK, but if it gets to 165, I'm going to sell it. Well, you didn't know about this resistance, so you could have missed it. You should have had your order at 163, so knowing where these levels are
right
helps us make our ideas. Now, this is what I was talking about, where I thought that this move was coming. And this is where we get the whole, Ukraine. Well, we caught that XLK got up to this level here and it staged a nasty reversal. It looked like it was going to break out, but it kind of all the way down here. So this is Ukraine. Now, what happens when we get down to here? Well, we reached a level that had been resistance. For some reason, the 143 level is important. Resistance can become support for the opposite. It's seller's remorse. People sell, it goes higher. They tell themselves they want to buy it back. So when we got here, we kind of had an idea that the market would, find a bottom because it reached an important level. Now, if you listen to the media, they would have said Ukraine. But guess what? We started rallying and Ukraine was still going on. So, just by this little anecdotal evidence, it wasn't Ukraine driving this market down. So we get resistance here. What happens? We get back up here. We hit resistance. Now we're going lower. We're basically at support again.
Right.
So knowing where these levels are is a big key to being able to figure out how to trade, because trading isn't just about understanding the trading strategies. It's about understanding how the markets work, because markets act different at different times. If you get a big move higher after a bottom, that's usually a good sign. You get a big move higher after something has been in an extended uptrend, that could be a bad sign. That could tell you that the market's about to turn. So we let the market tell us what to do.
Right. And we're getting a couple questions my email's just blowing up here with questions about the trading school. So I'm just going to knock these questions out the way, Mark, and we can get back here on the lesson.
Okay.
Does Mark Putrino go over student trade ideas? Yes, this happens every day. Are the sessions recorded? All the sessions are recorded and uploaded to the video library that we showed you earlier. Are the lessons live or pre-recorded? Everything's live. If you miss it, you can watch the recording, but everything is live and you can attend live. I encourage you to attend live. Does everybody that joined get a free laptop? Yes, that is until midnight. Until midnight that you see that. If you see a laptop in the checkout, that means you're getting one. Good question there, Phil. Next question here from John. Can this help me if I trade options, crypto, commodities, Forex? Yes, I actually trade options, and this has helped me get better entries and exits. And there's a ton of other types of traders there. Good question there, John. Next one here. Is this for new traders only or just for people that are in? Well, I mean, good question. We have people that are advanced people. We have people even that have been trading for 20, 30 years and they still are losing money. So it doesn't matter how long you've been doing it. It really comes down to, if you really want to learn and unlearn all those things that, you shouldn't have learned, basically. Schedule of the school, we went over that 7 to 9 a.m. and then 12 to 1 Eastern, Monday to Thursday, Friday, 7 to 9 a.m. Eastern. Good question there. Is there a money back guarantee? Yes, 7-day money back guarantee. And what is the price at renewal? That will be the same as today. It's not going to go up to the regular price. And I think that's most of the question. Does it include Benzinga Pro and for how long? Yes, it includes Benzinga Pro. So as long as you have the trading school, you will have Benzinga Pro. And last question, how many lessons? You have 8 chapters, but you'll go through a lot more than that. So is there anything you want to add there, Mark, on the school?
Yeah, it's important to understand that we have these 8 lessons, but then they start again, right? The fundamentals are never going to change. There's always going to be important price levels. Like, for example, I'm just going to use lesson 2. We talk about levels. We talk about what's a support level. Why would a support level turn into a resistance level? Why would a resistance level turn into a support level? And we talk about the fundamentals, but then we go look at the actual market. So the fundamentals don't change, but the market changes. And that's why for people that want to follow along with the market, it's a great place to be, because after we do the fundamentals, the market's always going to change. You know what I mean? So we did a class, since the beginning of September or the end of September, where every lesson 2, we talk about levels, but then we look at the actual market. So now I don't remember, because I don't even remember what I had for breakfast this morning, but I would be willing to bet that in early February, we were saying, hey, there's a good chance tech is going to run into resistance because it's reached a level that was support. So that's like live real time. This isn't me just saying, hey, man, look in my book. Last year, I said this was going to happen and it showed what happened. That's just, that's a waste of money. It's like, if you really want to learn how to trade, you have to look at things in real time. It's like you can, like, if you're a boxer, right, you can do all the training you want. You could do all the push-ups you want. You could do all the running you want. You could, be like Rocky and go chase the chicken around the junkyard to improve your speed. But until you actually get in the ring with someone else, you're never really going to understand what boxing is like. And it's the same thing with trading. Everyone's a genius in hindsight. But when we apply these concepts to the market, the students figure out different ways to profit from it. And, every student has a different personality, a different style. There's no one right way to do this. You got to do what fits you.
Right. No, that makes total sense there. And Nachavi asking, how long after the live session is the recording available? That's usually almost immediately there, Nachavi. Jordan Levy on the YouTube chat. I'm a student, and I got to say, Mark is the GOAT. He's one of the only guys you'll find.
I don't know about that, man.
He's like, all right, he's one of the only
Tom Brady's the GOAT, I guess.
You'll find online who actually knows what he's talking about. And it shows when you trade with him. So guys, we call it the trading school, but again, there's so many things happening in there. It doesn't make it justice doing that. Just calling it the school, because honestly, if you join there, just do it. You have a 7-day money back guarantee. It's totally risk-free. But Mark, I know you want to talk about, do like a little bit of a deep dive on a company, just to show the folks how you would, look for, when you use your pro, when you go through the news, if you're checking out the news of a company, for example, let's say CTRM, and you look at the technicals, Just give them a quick lesson, do a dive like you would do regularly on the trading school, technicals, all that stuff.
All right, so you're looking at Castor Maritime, CTRM. Let's take a look at this here. A nice move today. All right, let's go back here. All right, so we've obviously looked at this before. All right, so let's just do a lesson. Let's go back in time here to last April. A common thing or a characteristic of a market that's going down is seller's remorse, what we just talked about. I mean, think about it, common sense. Market's going down, people experience seller's remorse. You sold, but then it goes, actually, I'm sorry. Ooh, let me start that again. I'm confusing myself. When markets are going down, we have buyer's remorse, right? It makes sense. People buy, the stock goes lower, they regret buying. So markets don't move in straight lines. They're like staircases in a lot of ways. They're a succession of various trading ranges built up one on top of each other, or if the market's going down, below each other. And when that happens, we see this dynamic of buyer's remorse. Buyers bought here, they thought they were great, it went lower, they regret buying, they want to get out, they offer to sell it. Support becomes resistance. Same thing happens down here. People buy it, it goes higher, it goes lower, they regret buying, they want to get out, support becomes resistance. So we can see that it's like this stairway, right? Now let's go forward and let's see if we have the opposite dynamic. Seller's remorse. Is the level that was resistance going to become support? Resistance, people sold, it went higher, they regret buying. A lot of these people say they want to buy it back, but only if they can get it for the same price. Has resistance turned into support? Now, a low price stock like this has a lot of volatility, and so it's not going to be precise, but if you understand the concepts, you'll kind of understand, you don't need to worry about that. So resistance apparently is starting to become support. That sets the stage for a new move higher. So we would look at this company and we would think, all right, well, from a trading point of view, I'm not talking about like a long-term buy and hold. We can look at that too. We'll look at some of the fundamentals like in Benzinga Pro or whatever. But from a trading point of view, where would I be looking for the next top? Somewhere up around here. Around 240, because there was resistance there before. And levels that were resistance can become resistance again. Like, look at this, right? What was support back in October and November was where the resistance was. Support becomes resistance. For some reason, I don't know why, but for some reason, the 230 level is important for this company. So we have here, in this trading school, we don't really talk about too many patterns, because a lot of patterns I think are kind of, I don't know, they're kind of invalid, or, I don't know. I just think a lot of them, it doesn't make sense to really follow them, right? Everyone knows what the head and shoulders pattern is, or flags or whatever, I mean, there's a bazillion of them. Well, I think there's validity to what we have here. We would call this an ascending triangle pattern if we were in the technical analysis world. The ascending triangle. So why? Well, it looks like a triangle and we have this ascending line. Ascending triangles show bullish dynamics generally, not always, but what is the bullish dynamic here? Well, this blue line here is 195. I'm going to just make this smaller so it doesn't distract. So every time since February, well, from February to April, this stock got up to 195. The buyers ran into a wall of sellers. They were able to buy all they wanted to, and then the stock backed off, right? Went back up again. The sellers were still there. Knocked it back down, went up again. The sellers were still there. So the sellers are hanging out at like 195, and they're cool with like waiting for someone to come to them. They're not really aggressive. They're not in a panic. They're just like, hey, whatever, man. If I could sell this at 195, I will. But if I can't, not a big deal. I'm just going to hang out. So we have sellers that you could say are, complacent. They're chill. They're not aggressive. But what does this line here indicate? And this is kind of the important dynamic of this pattern. As time is passing from February through April, buyers are getting more and more antsy. They're getting more and more anxious. They're becoming more aggressive. They're willing to pay higher prices. So that's what this shows here. Back here, there were buyers, the best anyone could sell at was 145. This was in late February. But when we go into March, you could sell at 160. The buyers have become more aggressive. When we get into April, we're up to 174. So as time goes by, we have complacent sellers, aggressive buyers. It doesn't matter what market you are in, whether it's stocks, commodities, real estate. If you have a market where you have aggressive buyers and complacent sellers, it sets the stage for something to move higher. And sure enough, that's what happened. So these chart patterns aren't magical or mystical or anything like that. Well, they are for some people, but those people don't get it, and you shouldn't pay attention to them. These charts should be, if used and viewed correctly, a visual graphical illustration of what is going on with supply and demand dynamics, right? Buyers became sellers because they were remorseful, but now we've kind of broken out. Looks like we're going to kind of move higher. So one of the things we like to do in the class is, if there's a company that we're interested in, we like to go to their investor relations page. So let me see if we could find that, just to look at their earnings. Is there something we could find out? All right, so this is their website, Castor Maritime. Man, I love those big ships. On the History Channel, there's a show that's it's like the 10 most important people in history you've never heard of. And one of them is the guy who designed those whole things where, I don't know what they're called, but at the port where they have all the containers that they put on those big ships. I should have been a ship captain, man. But whatever.
No, Castor, I think that, so what they do is that they lease the ships like dry bulk. So
Okay.
yeah, they're like in that niche of like commodities. I think they have a couple oil tankers.
So we sometimes we go through companies' earnings releases, and this would be a good company to kind of get some insight from, because I guess you would say it's kind of, I don't know, economically, maybe not sensitive, but maybe like exposed. Like a company that's shipping stuff is going to have be kind of more in touch with what's actually going on with the economy than, I don't know, maybe like a technology company or a cloud company or whatever. So we look, sometimes we look at the earnings. I mean, we mostly focus on technicals, but sometimes we like to go through earnings. Like we got some really good trades out of the Tyson chicken earnings a few months ago. So this is cool, right? Shows, I don't know what this stuff means. I think Panamax is like the biggest that can't get through the Panama Canal.
I think at the top, I think you passed it, but at the top it gave you like some highlights, kind of summarizing some of those things.
Yeah. All right. So these are the highlights. And this stuff is good to look at because, these are numbers. It's not someone's opinion. So what we like to do is look for trends or changing. Is a company becoming more profitable? Is it becoming less profitable? We look at margins. We look for positive trends, like, well, they lost this money. Then, like, look at this. This is this here is a positive trend, right? In the first, I don't know what quarter this is, but in the quarter that ended in December of 2020, look what happened. They lost 6 cents a share, right? That was probably because of COVID. But in the quarter that ended in 2021 on December 31st, they made 18 cents a share, right? In the year that ended in 2020, they lost 26 cents. But in the year that ended in December, they made 48 cents. So this is, pretty darn positive. We have a company that was losing money and now they're making money. And ultimately that's what this is all about, right? Is trying to companies that make money. So, you don't need to be a CFA or an accountant to just look at some basic things here. We're just looking at our earnings. Wow, these guys were losing money. Now they're making money. That should, that gives us a sign that things are looking better, and there's a chance that it could go higher. So every company has an investor relations page, and you can get a lot of insight just by looking at it. You don't need to listen to other people's opinions. Like, one of the things we talk about in the class a lot is that it doesn't take that much to really kind of get some insight. There's some really cool free websites that we look at. Well, actually, let me show you guys one of those right now, because we are talking about the economy. And like, this here is a free website, and it's, if you're really like kind of a market junkie like I am, you can get a lot of insight on this. But this comes out once a month. It's free, and it's not biased, which is what we like. It's basically statistics, data. The people follow the manufacturing PMI. If you ever hear like the Purchasing Price Managers Index, this is what we're looking at. So this is one of the things we do in the class. There's like maybe 5 or 10 of these, various free websites we look at.
Right.
So the thought is, all right, is inflation still a big problem? What's going on? How can we get some trading ideas from this? So if we look at what some of the people are saying. The supply chain is still constrained. Talking about inflation, commodities up in price, pretty much everything.
I think this particular stock's a good segue into showing the folks a little bit about the market discussion that happens, right? Considering what CTRM is in commodities and that's inflation focused as well. So considering where everything is right now, Mark, commodities, inflation, the Fed, possible recession, what are you looking at in the markets? Because it's not the same starting and learning how to trade in 2020 when everything was going up compared to now when you have so many different things happening.
Well, that's why we look at things like this, because this gives us insight into, is inflation slowing down? I mean, this whole thing about, inflation was transitory, it was just so stupid. I mean, I first started talking about inflation back in August of 2020 because the way copper prices had soared.
For those that don't remember, Mark did call the bottom in oil. It was August, $60. I remember we were doing one of these sessions.
It was $62.50.
Nobody was talking about it. Everybody was hating oil. I even remember the handles where it's like, no, I don't want to hear about anything oil. But then it's like, sometimes you have to look at things from a trader. And honestly, that's one of the things too, where our emotions get in the way, right?
Yeah. We have to let the market tell us what to do. I mean, that wasn't any great call. I just looked at a level that, oil reached a level that had been support before, and it was oversold. I don't want to say it wasn't a great call, because it would have been a great call if you profited from it, but it wasn't like a complex thing. And I wasn't just guessing. I was saying, hey, we got to a level that was support. We're oversold. Things that get to support and are oversold tend to bounce. So we look at things like this to see, is inflation still rampant? Is it slowing down? Should it be our thesis? And we talk about how we can use ETFs to profit from inflation, not just to hedge ourselves. There are ETFs that move higher if inflation moves higher. And this is one of them. For instance, a lot of the students are in this. And I think we really started talking about this around back here when it was like 23. This particular ETF tracks inflation. So if you're worried about inflation, and frankly, you probably should be, because it's way bigger than, these so-called experts are talking about, this will continue to move higher. It just tracks an it tracks an index of oil, things like wheat, copper. So by looking at like a thing like this, which is free, it's an institute, it's a .org. All right, all right, Rodrigo, let me say you're not an economist and you know nothing about financial markets. I don't mean you, Rodrigo, but I mean just a person in general. And you saw this. Would you think commodity prices are going up or down? Commodities up in price, basically everything. Commodities down in price, natural gas. So that reverses trend. So we look at stuff like this and it tells us, hey, man, this inflation is still roaring. There's, regardless of what people say and the pundits, this tells us inflation is still going higher, and there's no reason at this point to change our thesis in the class of inflation is a real thing. I would like to say we have like theses, not a thesis, but a theme. And one of the themes is inflation. How do you make money off of inflation? There's a lot of ways. You can invest in commodity ETFs. You can invest in certain commodities companies. You could take short positions in companies that get hurt by inflation. So we develop, I think, themes, and then we go within the particular themes to come up with ideas that are trading. So it's not ideas that are tradable. So it's not like a trade of the day or mill. I think you used the term trade mill at one point. It's about learning how to like do this yourself. And like I said, it doesn't really need to be that complicated. Wall Street likes to make things complicated because they can charge high fees for it. Or a lot of the people that are commenting on Wall Street are not traders, they're journalists. So they don't really understand how things work.
And it's really important to always have our trader hat on, because look, the government will never tell you they're going to default on their debt or nothing like that. They're going to tell you whatever you need to hear so that, they keep the markets calm. But this guy Powell was saying transitory all this time, Mark, and in the school, we were all like a little bit hesitant to really consider that, because now you have, for example, all the situation with inflation, because even though they tell you it's like up 5%, like, that's not true. Like, I mean, there's even chicken, for example, I would buy like a certain amount for $5. It's like $20 now. So, and everything else is out of stock. So it's getting worse, like the supply chain and the high prices. And there are people that just can't cope with all that stuff, so like that's why everybody's a little bit concerned with the economy and inflation and all these things happening. As a trader, how do you look at that?
Well, I would be willing to give Chairman Powell a free membership to the trading school so he stops messing up so much. But then again, he's probably wealthy, so maybe he should pay full price, Rodrigo. I don't know if you have his phone number or not. But all right, so we have these inflationary things going on, and it's something that tells us, inflation is bad for the market. Inflation is bad for the economy. And I think we've got ourselves, or the Federal Reserve has themselves, in a no-win situation. It's like they're damned if they do, they're damned if they don't. It's like, well, they have to raise rates because we have inflation, but they shouldn't raise rates because the economy is slowing down. My thought is, if they come out and they're much more aggressive than we think, like, for example, if the Fed came out tomorrow and said, in my opinion, this is not a trade recommendation or anything like that. If the Fed came out tomorrow and said, we're going to jack up rates by a full percent, we're going to go way higher than people thought we would, I think that would be very bullish for the market. And I think that would probably put us into a new uptrend, because they're finally getting serious about it. I think if they come out and it's just the usual, we're going to do 50 basis points, or, and just say nothing, just master of the obvious type stuff. I think the market's probably going to continue to go lower. And, based on the fact that they've been wrong for so long, why would they be right tomorrow? You know what I mean? In reality, it should be the market setting what the interest rates are. It shouldn't be the Fed, because you have when you artificially mess with the market, you have bad things happen. So let me just give you an example. It used to be, in the olden days, not that I was there, but I've read a lot about it, that there would be a bubble like once a generation. Stock, like in the 1920s, the stocks bubbled and we had the crash, right? The next bubble was like the 1950s. It would take a generation, because the generation would have to die off so people don't make the same mistake. Like people, like after the generation dies off, no one's saying, oh, well, we're in a bubble now. I remember this from, 30 years ago. So then we fast forward to the 90s, and you have Alan Greenspan come along, and he, in my opinion, got a little too inflated, or was too into like being a superstar, and he held rates artificially low.
So
All right.
it's
What?
safe to say that the Fed created this then.
Oh yeah, in my opinion, absolutely, absolutely. This inflation is monetary. It's demand side. It's because things are getting better, but it's also because they just put too much money in the economy and because rates have been artificially too low. The thing is, this is Powell and his minions up there. They're what we call Keynesians or Keynesian. Now, Keynesians. Keynes was a famous economist, and he really just focused on the demand side. How does the demand affect the price or the inflation rate? They don't really look at the supply side. And that's why they're so wrong. They think for some strange reason, which I don't know why, Powell has said the amount of money in the economy does not affect inflation, which is just, in my opinion, just egregiously asinine. I mean, that's what inflation is. It's when you have more money in the economy with the same amount of goods. Like this modern monetary theory people are talking about. Oh, the government could just keep printing money and it's not going to hurt anything. Well, if that's true, why don't they just send a check for $10 million to everyone? Everyone in the country gets $10 million, right? Because there's nothing wrong with them printing money. Well, if everyone in the country got $10 million, a lot of people would stop working. The economy would probably seize up. The people that did keep working would say, hey, man, this is my deli. I used to sell a sandwich for $10, but I know everyone who comes in here is going to be rich. So I'm going to jack up my prices to $1,000. So yeah, I do think that a big part of this was caused by the Fed. And I just don't see, other than becoming super aggressive, like I just said, maybe a full percentage point rise tomorrow. I have a hard time seeing them say something that is going to really turn things around. Like Rodrigo, I'm sure you know this, but like when this negative GDP came in, I think it was last Thursday, we in the class were not surprised at all. We have been talking about how there's a good chance things are starting to slow down. And we weren't just pulling it out of the air. We were looking at various commodities. And the thought was, well, maybe these commodities prices are going lower because the demand is not there. For example, this is copper, right? It looked like copper was going to break out. And this is one of the things that we were talking about. There are actually ETFs that you can buy that track copper. So if you're not a copper trader, and you probably aren't, you don't need to think, oh, what the hell do I care about copper? Well, if it starts going higher, you can buy an ETF. But anyway, this looked like it was going to break out. This is the ascending triangle pattern we talked about. But, these patterns are not infallible. They're just put the odds in your favor. But we had this big move lower. And so what is this? Why is copper down? Why is copper falling off a cliff here? Is this because of an economic slowdown? Are people just not buying as much copper? Copper's in everything. It's like housing, autos, electronics. So just by watching these commodities, it kind of gave us an idea that, there's a good chance the country is already in recession. And sure enough, the report came out and, that's what happened. And the report came out on this day, but we were talking about how, this report is as bad as it looks, even though some people are like, oh, it's not so bad because the consumption is up, blah, 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 blah. Well, maybe some consumption numbers are up because people are paying higher prices. You know what I mean? It's like they're not more people consuming. They're just paying higher prices.
At this point, that's where we are. We're just getting less stuff. We're just paying more or the same for it.
Yeah, dude. I mean, gosh, it's like I got I forget. I don't know if it was a Tyson chicken or whatever. Anyway, I got the chicken tenders for my daughter, and it's like there used to be 8 in the pack. Now it's like the pack is the same size, but there's only 6 in it.
I bought plates, man. I buy these plates for eating stuff, obviously, but like they literally changed the size of the plates for the same price with the same picture. Walmart's getting sneakier. They're getting sneakier, and people don't notice it, but it's these are the little things that you have to look at, right? Because the Fed's not going to tell us, right? We have to look at it as traders.
Yeah, I mean, you don't need to be an economist to know that things are pretty bad. I mean, I was in the supermarket, I don't know, a week or two ago, and it's like you hear these old ladies like talking about like how prices have gone up so much. And it basically comes down to this. If you have an economy with a set amount of goods and a set amount of money, then everything will come to an equilibrium. Like, for example, in a really simple hypothetical world or hypothetical economy, say you have, five goods and you have $10. Well, each one of those goods is inevitably going to end up costing $2. That's just the way, financial markets are, the economies. Now, say the Federal Reserve comes along and says, hey, we're going to throw another $10 into this economy. So now you have five goods, but you have $20 in the economy. So what's going to happen? The goods are inevitably going to end up costing $4. So putting more money into an economy that has the same amount of products causes prices to go up. And that is the definition of inflation. Excuse me. And I don't recall what day it was, but I could probably find it where Powell gave the speech where it was like, money supply has nothing to do with inflation.
That's so crazy, man. Like, I can't believe he asked. Did he say that? Like,
oh yeah, dude, he said it. Absolutely.
but here's the thing, like they're always going to tell you like the story that makes it look well, because that they kind of need that story to raise rates because they were kind of late. But if you look at, for example, personal income spending, income rose by 0.05%, but PPI rose for 0.09%. So even though they're giving us certain numbers, and it's way up, prices are way up more than 0.9%. We all know that. So I personally feel that the Fed is trying to make this look as not as bad as it is, because they might need an excuse to say the economy is good. They have the low unemployment rate to say that for now. It's really low, but I don't know, man. It's just, I don't think they're giving us the full story. I think they're just playing games.
Yeah, well, it's a political organization. I mean, I don't care what side of the aisle you're on. Every politician wants to be able to give away free money. So it's happened before. It happened with, like I said, with Greenspan. They held the rates low. Then Bernanke came in, and Bernanke, his famous thing was like at some speech before he came in, he was like, oh, because of the tools that we have in Fed policy, we'll never have like business contraction again. And then it's like, when it's like, that's the death knell. And then sure enough, what happened? Housing crisis, 2008. So yeah, well, I think the problem is that these people come from academic backgrounds. If I was running the show, I wouldn't go to academics. I would pick people that have real experience, that don't just get their stuff out of a textbook. But actually, while you guys are looking at this chart, let me just show you what I was talking about with Microsoft and Apple. So Microsoft and Apple, literally, these stocks are an eighth of the S&P 500. The S&P 500, in theory, has 500 companies in it. Two of them are 12% of the index. So look at this. So Microsoft is sitting right kind of around this support around 275. Okay. It's a little choppy. Market bottoms are more volatile than market tops, that's because tops, buying comes from hope, but selling comes from fear. So bottoms are more volatile. So that's why you see a lot of this like choppy action. But for all intents and purposes, Microsoft is testing this important support level around 275. It's trading at 282. It's only $6 on a $275 stock. So like I said, for all intents and purposes, we are testing this. And when we look at Apple, and Apple is, for all intents and purposes, I mean, this is pretty clear. This was, I think, an over-exaggeration here with Ukraine, but pretend this little thing didn't happen here. Resistance, support, support, support. So if Apple and Microsoft start to look like they're going to break down through these levels, the market is going to head south. And so the question is, all right, Mark, well, gee, that's great. What am I supposed to do? I'm not going to go out and short Microsoft. I'm not going to go out and buy puts on Microsoft. Well, then we start looking at things like these inverse ETFs, like for example, SQQQ. This is very popular. A lot of the students trade this. This is designed to move inversely to the NASDAQ 100. And it also uses leverage to make it move 3 times as much. So if the NASDAQ 100 is down 1%, this is going to be up 3%. If the NASDAQ 100 is down 5%, this is going to be up 15%. Like, we've been going through this big sell-off in the market, right? And this thing has gone from 31 to 47 while the market's been going lower. So this is an example, Rodrigo, where it's like we let the market tell us what to do. What's going to happen? I don't know. I mean, I think we're in a bear market. I think bear markets take a long time to unwind. I mean, things started to get really ugly back in November. All the Reddit stocks are crashing. We peaked in the tech sector, peaked in December. So I don't know. I think we're going to go lower. But if Apple and Microsoft look like they're going to hold, and that probably sets us up for some type of a short-term bounce, and then we go back onto the long side. So it's not about like, hey, man, I think this is going to happen. I think that's going to happen. The only thing that knows what's going to happen is the market. So that's why we try to let the market tell us what to do. So, it's not too often that you get the 2 biggest stocks in the market lining up at the same time at support, right? So this is going to be very impactful on the rest of the market. If these things both start to break down,
right,
we position ourselves on the short side. If they look like they're going to hold and start to bounce, we position ourselves on the long side.
Interesting. And let's go over some of the now these are some of the concepts, right, that you teach in the trading school. Now let's go to some of these concepts once they've been successfully applied into some of the trade ideas, because I do know that from the education the trade ideas come. So show us a couple trade ideas from the trading school that you've had there with the folks.
All right. Let me show you something on here. So this is this is an introduction about the philosophy and so forth. But why do traders fail? Like emotions, false beliefs, they don't follow a plan. Why are traders successful? They know how to make money without being concerned about being right. This is an important concept. And people might say, like, what the hell are you talking about? How could I make money if I'm not right? Well, what I mean is, say something gets to 50 and it bounces, and your trading strategy was to buy it if it broke an uptrend line, and you buy it at 52 and it goes to 55. It's like, you can't say to yourself, oh, I didn't get it at 50. Babe Ruth struck out more than any other baseball player. So our philosophy is it doesn't need to be complicated. We focus on levels, trends, and momentum. These are our classes. Levels, trends, momentum, pattern. Patterns are really just combinations of this stuff. Everyone loves the head and shoulders pattern, but a pattern is basically a combination of this. We talked about psychology. We talked about how we go through the markets and look at the different sectors. But just to give you a couple ideas here. I mean, this is a little outdated, but I like this example because this actually came from one of our students. This was not my trading idea. So this stock Twilio, I had earnings and it got crushed, right? Dropped all the way down to here. What happened? It found support. Why did it find support at this level? Was it just some random coincidence or some, freak of nature-ish type thing? No, it found support here because it was support back there. Levels that are important, support can stay intact for a long time. So we dropped to a level, we got oversold, and we had a big amount of volume. This was like what we call a capitulation. A capitulation comes when in this situation at a bottom, when the sellers just get sick of watching their stock go down and they just say, you know what, just get me out. Pretend you're some big shot hedge fund trader, right? You got 1 million shares for sale and you sell 100,000 here, you sell 100,000 here, you sell 100,000 here. You keep waiting for it to come back up. but finally you get this big move. You still have 700,000 shares to sell. You just tell your broker, dude, just go get rid of this thing, make it go away, puke it out. So not so pleasant term. It's like, just go puke this thing out. And as a result, we get this big volume. So we've reached support level, we're oversold, and we have this big volume. Why is this important? Well, this tells us if the sellers have capitulated, they're going to be out of the market. So when buyers start saying, hey, maybe this news wasn't as bad as we thought, maybe we should go in there. Well, they come and they start to buy, but guess what? There's no sellers around because the sellers have all capitulated. So the buyers have to be willing to pay higher prices or bid higher prices to get sellers in off of the sidelines. And that makes the price move higher. And that's what happened here. So our sell target was 312. And the reason why it was 312 was because it was a support level. Support becomes resistance. So just based on momentum, levels, this became a successful trade. And, I like to show this because it wasn't my idea. It was one of the students' ideas, and it worked out really well. So that's the type of thing that we look at. I can show you guys some other stuff too. We have a lot of day traders, right? And a lot of the day traders that are new ask me, like, how far back should I look on a chart? And my answer is, I guess, as far back as it takes. You should, even if you're trading in a short-term time horizon, you should be aware of the longer-term dynamics, because obviously if you're a trader, you want to trade something that's going to move, right? I mean, that's kind of all. You don't want to just buy something and have it sit there. You want to trade something that's going to move. So what makes a stock move on a given day? Well, there could be, a news item, earnings or something, an upgrade, a downgrade. But if there's nothing like that, what's going to make something move is a longer term dynamic. Is something overbought? Is something oversold? So this IBM, we see a really clear resistance level here. And what happened? We got to resistance and we were overbought. So from a longer term perspective, remember, we're going to talk about this in the context of a day trade. From a longer term perspective, we knew IBM was overbought. Overbought means, like, every stock has a typical or a characteristic trading range. When something gets aggressively bought and gets above that, we call that overbought. Why do we care? Well, overbought things tend to reverse. It's like a rubber band, it gets stretched out too far. So we have these dual dynamics of getting stretched out too far, becoming overbought, at the same time as we've reached a resistance level. So things that are overbought and reach resistance tend to sell off. So that's what we saw here. So the question is, or the next step is, how do you know, or what would give you conviction that this reversal is actually happening? And that's what we look at in a shorter term point of view. So we had this reversal, we were overbought. Once we got back to 138, we said, all right, the 138 level was important. Once it broke that, that was our trigger to get in from a short-term trade. Now we're looking at a day trade. So the short-term position was put on, or the short position. And just because I say a short position, it doesn't mean you have to short it. A lot of our traders are options traders, and they would be buying puts. So what would have happened to tell us that we were about to reverse? And the answer is, well, we had this false breakout, and we got back below 138. So that's when we got in. Now, the next question is, all right, where do we get out? Where do we cover our short? Well, we looked at the 136 level, and that had been an important short-term level. So the target was 136. And you can see we went below that, but a $2 profit in a matter of a half an hour is, phenomenal. Because if you're an options trader, you could have doubled your money in a half an hour, if not even more. So this is a theme I like to talk to Rodrigo, to our day traders is,
Right.
Short-term ideas can come from longer-term dynamics. So that makes sense, right?
So so on top of, the education, the folks know that they can get the recording, but also the trade ideas, you post them in a chat room. Now, let's say if they have a question about one of their trades, they can also ask you about this as well, right?
Oh, absolutely.
Yeah.
Absolutely. It's a class. You know what I mean? It's like we
Yeah.
have a lot of, well, what I like to have is just discussion, because I think the good ideas come from, brainstorming, talking about things like I just showed you that Twilio. I mean, that wasn't even on my radar screen, or Twilio.
Right.
But one of the students was watching it. So it's the exchange of ideas, I think, is where people really start to learn.
Yeah, and so for those of you guys that have been watching, right? So who's talking, right? So Mark Putrino, former hedge fund manager. Mark, let's do something. Just tell us a brief, because we do have a lot of people there on the YouTube side and on the Zoom call. We have about 500 here. So let's just briefly go over your background, because I know you've traded with multi-billionaire giants like Gabelli, Cohen. You have an extensive background in Wall Street. You've been a market maker. Just tell us a little bit about your background so that the folks see who their instructor is at the trading school.
Well, this is me here. um, all right. So I I went to business school back at NYU. Basically, I'll just give you all that. When I got out of college, the early 90s, I used to follow the Grateful Dead around. I didn't really know what I wanted to do. But I went back to business school when I realized I actually needed to make a living. And I got a degree in finance. And then that's when I met Mario, and Mario hired me. And Mario is one of the greatest money managers in history. So I spent a few years there, and I actually worked on his broker dealer desk as a market maker. And I think kind of a funny thing to me, or uh, something that kind of, I don't want to say caught me off guard, but kind of surprised me when I started to talk to retail traders, is this like mythical thing behind what an actual market maker is and what an actual market maker does. And I could tell you, as someone who was a market maker for 2 years, we don't show up at work thinking, how can I go rip the little guy? Yeah, that's like not even part of the picture. If you're a market maker, your main job is executing orders for your clients. But anyway, I'm a good person to teach this class, because I worked for Stevie and Mario, and then I was the head of trading at 3 different institutional money managers. And within these money managers, we had mutual funds, we have hedge funds, we have all kinds of different trading strategies. And I'm also in the Market Technicians Association. So, there's really not too much that I don't think that I've seen. And that's where we go back to a lot of the
Really quick here, Mark. Just want to give a shout out here to Jari. Welcome to the Benzinga Trading School. Let's go. Shout out
get
to
myself
Jari.
one of those horns. But I will tell you this: in the trading world, people aren't, in the institutional world. It's not as complicated as it sounds, right? In the institutional world, we're not thinking about Elliott waves. We're not thinking about GAN theory. We're thinking about, hey, I just got an order to sell 1 million shares of Apple. Where can I sell this? Or I got an order to sell 1 million shares or buy 1 million shares, which actually wouldn't even be that big of a trade on a stock that trades 90 million shares on a day. Let's say I got an order, Rodrigo, to buy 50 million shares of Apple, right? Let me look at this chart and think, all right, what is going on here? I want to buy 50 million shares. How can I do this without affecting the price of the stock? And by knowing where the important levels are, where the sellers are, where the buyers are. Like if you were trying to buy 50 million shares and you started to see the 156 level starting to give away, you might pull back and say, hey, this thing is going lower, right? But anyway, from my experience and my years of doing things like that, that really manifests itself very well into being able to prop trade, or to trade around these levels and trends proprietarily, or day trading. So I think Wall Street tries to make itself sound or seem more complicated than it really is, so they can charge high fees. So I understand why a lot of people are confused. Like when I decided to kind of quote unquote quasi retire a few years ago, or actually like 5 years ago at this point, I was kind of thinking like, all right, well, what the hell else am I going to do? I'm too young to sit here and watch Matlock, or rerun some Murder, She Wrote, or their Golden Girls. And whatever, I remember one day I was like just on the internet or whatever, cruising around, and I saw this like newsletter. It's like it's a newsletter like, oh, my recommendation I gave you last week like doubled. So of course, as a trader, I'm like, all right, well, what did this person do that made their, where they got a double? So for every stock, there's a bid and an offer. Like we can see up here in Apple right now, 159.30 to 162.90. I mean, the spread isn't that wide. There's way more bids and offers in there, but every stock has a bid and an offer. The bid is at that given moment the highest price anyone in the entire world is willing to pay for that stock. The offer is in the entire world the lowest price anyone is willing to sell that stock at. You have a bid and an offer. So this particular newsletter said, I made this recommendation and you double your money. I'm so great, blah, 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 blah. And I looked at the stock and it turns out it was a penny stock. The quote was, the bid was 1 cent. The offer was 2 cents. So someone comes along, they sell 100 shares. What do they get? 1 cent. It's the highest anyone is willing to pay them. 10 minutes later, someone else comes along and says, oh, I'm going to buy 100 shares. They're going to pay 2 cents. It's the lowest anyone is willing to sell at. So this stock on paper, in theory, doubled, but it didn't move. There's no way you could have made money on that. It's like something going from 1 to 2 cents is not the same as something going from $10 to $20. So that kind of, I don't know. It was just like, I don't know. There's a lot of people that need education out there. There's so much myth and misinformation, and So I don't know. I think this is a good fit. I like doing it, man. I like teaching people. My grandmother always said I should have been a teacher. But anyway, yeah, there's a lot of misinformation. There's a lot of, like people talk about algorithms. Oh, the algos are taking it up. I mean, an algorithm is like it's not good nor bad. It's just a tool you use. It's like a carpenter uses a hammer. Traders have algorithms. Like an algorithm is just a computerized thing you put your order in, right, to a platform. Just to make a really simple example of an algorithm is, all right, buy 10% of the volume of Apple today. All right, so I have my algorithm out there buying 10% of the volume. So I come back, maybe I went out or whatever, and I come back and I say, oh, Apple today traded 88 million shares. Well, that tells me I bought 8.8 million of them. Some algorithms can be very sophisticated. If it goes down, get more aggressive, buy more shares than 10%. If it goes up, buy less shares. Maybe it's different. If it goes up, maybe it's breaking out, so buy 20%. You know what I mean? So there's all these different like algorithms, and they're not good nor bad. Like when people say things like, oh, the algos are taking it up, or the market makers are doing this, it's just not, it just shows a misunderstanding of how things really work. Like the dark pool, like people are like, oh, dark pools. What's it? A dark pool is really just a private stock exchange. If you're a Goldman Sachs or you're a Morgan Stanley and you're that big, you're eventually going to say to yourself, well, why am I routing my clients' orders to another exchange when, why am I paying this exchange fees? Why don't we just create our own exchange so we could just trade on our own exchange without paying fees? So that's what a dark pool is. A dark pool is like a private stock exchange. 100 years ago, there was the New York Stock Exchange. If you wanted to trade, 99% of the volume traded in New York. Now, I think there's 60, 70, 80 different venues, different dark pools. And
Right.
kind of when they first started pitching dark pools to guys like me, 20 years ago, it's like, oh, if you trade in our dark pool, people aren't going to see what you're doing. And that's where the name dark came from. It's like, oh, this is hidden, but it's not. If something trades in a dark pool, it's got to be reported on the tape and the times and sales. So that's
Right.
Rodrigo, in addition to teaching people about trading, I like teaching people about how Wall Street really works and dispelling some of the myth and so forth.
More importantly, it's the fact that like retail traders, usually when they try to wing it per se, it's a very popular strategy, and it's like I'm gonna watch a YouTube video here, a YouTube video there. I want to piecemeal it together, and then I'm ready, right? And that's the thing, a lot of traders, especially the new ones, fall into emotional trading. It's very common, unfortunately, that if I talk to somebody on the phone, sorry, and they're joining the school, they want to join the school. Usually, not always, but many times, it's after they have lost a lot of money trading on their own, and it just hasn't worked out for them. And usually, what I'll tell those folks is that, like like I just wish you would have reached out before. And that's really part of the what we're doing here, that we want to help retail traders, because there are so many common mistakes and the basic mistakes, Mark, that just being in the right community just saves you from making these mistakes as well.
Yeah. There's no doubt. And we got some some students that are really into it. So, one of the things that we obviously talk about is, we're not just here to talk about the market for the hell of it. We want to figure out how to make money. So let me just give you an idea that we kind of came up with yesterday. So we go through the sectors. I showed you guys the tech sector. It's at a bottom, but when markets go down, things go down in different orders, right? The garbage or the ugly, that's the first stuff to go, like all the Reddit stocks from last year, the companies that don't make money. Then we have like the tech stocks sell off and the financials. The last things to usually go are consumer staples, right? When the market really goes down, everything goes. But you'll see that, while technology was going down, consumer staples were going up. Now, what are consumer staples? These are companies that sell things people need, like food, medicine, So going through the charts, going back to Friday, because what's today? Today's Tuesday. After this sell-off, this ETF, which remember tracks the sector, landed at this support level. Why was this level support? It had been resistance. Resistance becomes support. So when it started to look like this was breaking down, we said to ourselves, hey, man, there might be something going on here in the consumer staples sector. Let's potentially look for some names that might be going down more. And maybe we can get some trading ideas on the short side here. Maybe if you're an options trader, this would be a place to buy puts, right? So this ETF, every ETF has a fact sheet. The spiders are run by State Street, all right? So we can just get the fact sheet. I'm going to just type in SSGA for State Street Global Advisors. And that brings us to...
For those that were asking what platform Mark is using, that's Benzinga Pro. It is included with the trading school.
So now we know there's going to be, or we think there's going to be weakness in this particular sector. So we're going to start looking at some of these companies here. Does anything look particularly weak? Does anything not look weak? So let's just take a look at some of these. So we looked at Coke, and it's like, hey, this looked weak. So yesterday morning, we talked about potential short ideas or buying puts on Coke based on the fact that the sector looked weak. This looked weak. This is what we call like a broadening formation here, which shows the market's kind of not have leadership. And sure enough, what happened? We had this big sell-off. Now, where did we find support? Right here, the same level that was resistance. Support becomes resistance. So this trading idea came from seeing that the sector looked weak. So we saw the sector looked weak. We look into the sector. I don't know why Coke is considered a consumer staple, because if the world's coming to an end, I don't think you're going to be thinking about drinking Diet Coke unless you're really addicted to it. But that's where we had our target, and that's where our idea came from. And again, like almost any chart, we see our fundamentals at play here. Resistance became support. Support held out for a few months. Resistance becomes support. So just by understanding where these levels are, it gives you, you're going to be way ahead of people that have no clue of what to look at, just knowing where these levels are. So what else looked weak in the sector? This is something else we talked about, going short on or taking the short side on. This Kimberly-Clark, right? It's consumer staple. And what kind of made us think about it, all right, let me just get rid of everything here. So this stock gaps up, and what happens? Well, it runs into resistance, the same level that it had been resistance in back in November of 20, April of 21. So it's not surprising that this rally stalled out at 144. That's where resistance was, and resistance can stay intact for a while. So we had a big move lower, and then we're just kind of trading sideways. So the thought is, hey, this thing looks like it's going to break short-term support. And sure enough, it did. Yesterday, it was down 2%, which doesn't sound like a lot, but in one day, and if you're an options trader, that's a decent move. And it looks like it's still going to go down farther. So we had a stock that's breaking support and is dropping into a gap, right? There's an old saying on Wall Street that gaps refill. And it's true. A lot of times we do see this. Something gaps up, something gaps down. Now, there's a reason for this. Remember, we talked about how seller's remorse can turn a level that was resistance into support, right? If we have a lot of sellers, they sell, the price goes higher. Now, a lot of these sellers regret selling, and they tell themselves they're going to buy it back. So that's why the level that was resistance can convert into support. Now, when we have something gap through a level here, which means it didn't trade there, like on April 21st, it closed here down to 128. And on April 22nd, it opened here. So there was some kind of good news came out. That's what we call a gap. It shows up on a chart as just a blank space or a gap. So think about that. Because it went through those levels so quickly, there was no people selling who are now remorseful. The stock just didn't trade there. So you're not going to have a bunch of remorseful sellers trying to buy the stock back within this range. So there might be a lack or a dearth, or whatever you want to call it, of buy orders. So because of that, if we break the short-term support, sellers are going to have a hard time finding buyers. So they're going to have to offer to sell their shares at a discount. And that is what forces the market into to go lower. So, by looking at the ETFs, we came up with two solid ideas, which, Coca-Cola worked out because it did the whole thing there in the megaphone or the broadening formation. It got to our level where we figured we thought there would be a good chance where there would be support. So, this would be time to close this trade out now. And where did this come from? Well, by looking at the sector, we said, this sector looks weak. Let's look within the sector for the stuff that looks the weakest to look for some trade ideas, right? Walmart's in this sector. All right, yeah. Now this could, like right here, right off the bat, here's a potential trade idea. Let's see, when did I write this? Walmart reverses back below the 152. Okay, so you'll see. I don't remember when we looked at this. It was probably 2 or 3 days ago, but Walmart has resistance at 152. Was resistance back here, November of 20, August of 21, November of 21. Resistance levels have a tendency to become support. So it's not a coincidence that during this sell-off, the stock found a bottom around 152. It didn't just stop there out of the blue. You know what I mean? Like just some random sequence of cosmological events made it stop there. It paused at 152 because it was a resistance level. The 152 level, for some reason, is important for this stock. Now, how do we turn this into a trade idea? Well, when things get to important levels, they don't usually hang out for that long. They tend to get to the level and reverse or bounce. So I would say Walmart looks like it's set up to have some kind of an imminent move. Maybe it bounces, maybe it breaks down. But I think it's poised to move. We have a stock that has reached an important level and it's oversold. So when things get to important levels, even though it's oversold, it could break down or it could rally. It's probably not too likely that this thing is going to be at 152 for, a week or more. In a week from now, it's probably going to be at, 158 or at 148 or 145. So like, this is one of the, the things we do, Rodrigo. It's like I think like an important price level is kind of like analogous to, if you're hiking in the woods and you come to a fork in the trail, or if you're driving and you come to a fork, when something gets to an important level, it tends to go one way or the other. It really doesn't tend to stay there for too long. Look at back here. Like, this was the peak for Walmart. When it reached this important level, it was there for like a week. Here, it was there for literally 2 days. So I think we could see something here, Rodrigo, in the Walmart.
Right. And I mean, guys, if you are impressed or if you do want to do this more often, you know that the Benzinga Trading School is Monday to Friday. So Mark is there the entire day. I popped in there for the early class in the morning. I can't tell you how valuable it is to have that, class from 7 to 9 a.m. Eastern, right before the market opens, and really kind of digest what's happening with the markets and keep that education fresh, because usually when you get too overconfident, even with the trade, typically that's when you mess up. So it's very important to stay grounded on the concepts, the lessons. It's very easy for somebody to, for you to lose all your money if you go out there and do crazy trades. And that's really why Mark emphasizes really, that you have to follow the strategy, the plan, the lessons themselves, because even though you learn the lesson with one chart, okay, you might think you understand it, but when the market is open, stocks are moving, and things are happening in the market, it's not that easy to really kind of find that trade. Experience is really, I guess, the number one thing, Mark, because a lot of the folks that maybe are the majority of the folks in the school, they're retail traders, right? But you actually traded, with institutions and big firms. So you actually have professional training. It's not like what most retail traders rely on, and that's either hope, and that sort of stuff, right? I hope it's going to go up, or I think it's going to go up, and it looks good, that sort of stuff.
Yeah, I mean, hope is not a plan. So we don't want to hope on things. So let's look at a couple other things here. Actually, Rodrigo, I'm going to take a 2-second break and go get a new glass of water.
Yeah, no worries, man. We'll take care of that really quick. I do want to give a shout out. Let me make sure I pronounce this right. Hold up. Tari 74, welcome to the trading school. Give us a warm welcome to Tari. Let's go. So guys, if you do want to try it out, go ahead. 7-day money back guarantee. Everyone that joins gets a laptop. It's only annual. It will renew at the same price next year. And the live sessions are Monday to Thursday, 7 to 9 a.m. Eastern, 12 to 1 p.m. Eastern. And the chat room schedule is open Monday to Friday, 9 to 5, right? And that includes the questions chat room, all that sort of stuff. There's a lot of folks here that Craig Anthony on the YouTube chat. Thanks for a great episode, guys. Really enjoyed this. Good stuff, man. I mean, I don't think we're done yet. Mary, only in America is Coke considered food. I don't know if they have subsidiaries. They might have subsidiaries that own food, maybe. Let's see, a couple questions here from you guys. How many chapters? There's a total of 8 chapters in the trading school. How long will you have pro? You will have pro as long as you have the trading school. You will have Benzinga Pro. So, and if anybody does have questions, we do have a contact in the chat that we've been posting. Rodrigo, that's me. So you guys can reach out if you have questions. Sorry, that's my cats. But yeah, we're just waiting for Mark to come back here with a full glass of water so that we can get back here to the session. We were talking about Walmart. There's a couple other tickers we're going to go over before we do wrap up the session here. I do want to let you guys know this whole thing with the trading school will expire at midnight. So make sure that if you do want to join and do this stuff with us in the community, do it before the deal expires. Um, I think Mark um, decided to take a walk in the park. Oh, there he is. There we go.
I'm back.
Hey, man. So yeah, somebody just sent me a quick message here that yeah, great session and everything. Was it Craig Anthony? Craig, I mean, imagine, and Mark hasn't even started whipping out, the Mark jokes because in the trading school, I'll tell you, sometimes I don't even know what I'm doing there. Sometimes I thought we were talking about stocks, but then like he whips out this joke, and it's like it's really good that you have a community that you can actually have fun, trade, learn, and all in one place, right? And it's not like these pump and dump chat rooms like you have on Reddit or Wall Street Bets. These are real people, real traders. I know them, many of them, and I can tell you they're all really eager to learn, to trade, and more importantly, be part of the amazing community because I can't talk about the trading school without talking about the community in the trading school. Without them, it wouldn't be what it is. And I remember when we started this, Mark, it was last year, just you and me, me, and Cypher, and Born to Be Free. Maybe I don't, but it's great to see the progress that many of these folks have had, and it just, kind of, I mean, it's a weird feeling because you help these traders and you do all the work there with the classes like, hey Mark, I don't understand this, or hey Mark, I'm not understanding this concept too well, or why didn't this resistance level such and such. So having this access to you, a former hedge fund manager that has professional training on trading, not relying on emotions, right, or piecing together a couple of YouTube videos, I really think that's where the value comes to life and where everybody helps each other out. Because when I started, there was nothing close to this. It was just pump and dump scams. I know a lot of you guys have been through that. So have I. And that's really why I can tell you with confidence that you should give this a try because this is different. And that's why you have a money back guarantee. And this is coming from me as a trader, you know, just for everybody, right?
Well, Rodrigo, I hear a lot of the students say that, they've spent years and, different YouTube videos and different newsletters and different this and different that. So I understand why people are so confused. You know what I mean? I think it basically comes down to essentially two things. It's probably the 80-20 rule, right? I think 80% of the reason why retail traders are confused is because there's a lot of quote unquote experts that don't know what the hell they're talking about. You know, it's like, oh, gee, I was great for the last 3 years. And now I got my Lamborghini in the background and wear my man bun. You know what I mean? So that's probably about 80% of it is that there's just, what would we call them? False experts or people that think they're experts that aren't. Maybe some people really try. I'm not saying they don't. And then probably the other 20% is that Wall Street wants things to sound complicated so they could charge fees for it. But it really just comes down to the fundamentals, which we go over and over and over and over. And it's like if you're a golfer, how many times in your life have you said to yourself, like, don't move your head, don't move your head. And it's like, you take all these lessons, you have all this, things are blowing up, blah, blah, blah. It's like, don't move your head. And then you hit a good shot. It doesn't really need to be that complicated. And before I start, it's a back and forth, Rodrigo, like I'm learning a lot from the students. Like, for example, for all these years, I never knew that I was a bad guy because I was a market maker. You know what I mean? I never knew. It's like, oh, gee, I was a market maker. My life revolved around ripping off the little guy. But that's what a real class is. And one of the things that kind of inspire me are part of the vision of the class that, you, me, and Neil have kind of put together here is I went to business school at NYU, I don't know, 25 years ago. Gosh, has it been that long? 25 years ago. And I took however many classes you need to take to get a master's degree, probably 5 a semester for 4 semesters. I took 20 classes. And you know what? There's like two classes I remember. I mean, I have vague memories of other ones, but one of them is public speaking, because that was a worthwhile thing to take. You learn how to, basically the class is you stand in front of the class and you give a presentation. And people don't like to public speak, but by getting the practice, whatever, that helps. But the other class that had the real profound effect on me was my ethics class. And it was taught by a guy by the name of Larry Zicklin, who was a famous, legendary money manager for a firm called Neuberger and Berman. And he became, I don't even know if he's still with us. I would suspect he is, but he's a big philanthropist, donates millions to, charities and blah, 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 blah. Anyway, this was the class. Back then, people literally had newspapers, and Larry would come in and he would put the Wall Street Journal on the desk, and we would all form a big circle around the classroom. There's probably 25 or 30 students. And he would say, all right, here's your headline. XYZ is buying ABC. All right, let's think about some possible ethics things here. All right. Well, what if the CEO's secretary knew that there was insider information and they took advantage of it? Bad? Yeah. What if the secretary's child was dying of terminal brain cancer and she needed the money, or they needed the money? Is it bad? And I'm not saying what's right or what's wrong. I'm just saying that the open exchange of ideas, the brainstorming, the talking, I think it was the best class that I had. I mean, 25 years ago, it's like the only class I remember. And I think that is a good thing for what we do here, because, Rodrigo, we have a wide range of students. We have students that are in the restaurant industry. We have students that are in the trucking industry. We even have a bail bondsman, and so there could be things going on that we don't even think about, but someone in the industry could say, hey, I own a restaurant and the price of butter has tripled, something like that. And then we can look and see, is there actually a butter, futures for butters, cash settled butter futures? You know what I mean? So it's the exchange of ideas. I think that is the real good learning experience, because no one knows everything, right? I mean,
and that's how you can take, because here's the thing, if the market is ugly, there's other things you can trade, including commodities. I even found out that you can trade oranges, like orange juice.
Dude, you live in Florida. You didn't know that?
Well, I didn't know you could trade it, but I did see some piece of news about some oranges, and I'm like, orange futures? Like what? Like
oh, it's frozen OJ, I think it is.
But yeah, this is what you're referring to, that you can trade around different. It doesn't have. Yeah, I mean, it could be in an equity form, but it could track something else, right? We don't have to be trading the markets. We could trade something else outside of a company.
Yeah. We get our ideas by doing the brainstorming, going through earnings releases, things like that. So I don't know why I can't bring this up. Maybe it's frozen OJ, but anyway, yeah. So there's orange juice futures. Like, one of the things we looked at, and again, it's a little outdated because it's a few months ago, but I think it's a good example, similar to the Twilio thing of what we do, right? Tyson Chicken, the chicken company, if you could even call it that, or I was going to say food company, if you could even call it that, right? Back here, we had these really, a big spike up on their earnings. Now, what I had said to the class, and what we discussed, is this would be a good company to kind of delve into their earnings, right? Most of what we do is technical trading, or I like to call myself a market technician. I don't like the term technical analyst, because I think it's just too ambiguous. But before these guys reported, I said we should take a look at what they say, because who has more exposure to an economy than a company like this? Because they're raising chickens, right? So they're going to know what's going on in the agricultural markets, because they have to feed their chickens with corn or whatever. They're going to know what's going on in the trucking market, because they have to truck their stuff to market. They're going to know what's going on in farming, because, they know farming. So certain companies, you can get some good insight. Like like UPS or FedEx. When they report, we look at their earnings because we can get insight into the economy. So these guys reported what seemed to be a blowout number. If I remember correctly, they reported 295 and the estimates were 187. So it was this blowout quarter, and we have this big move higher. But we, being students of the market, the Benzinga Trading School, said, all right, well, let's take a look at these earnings and see if we can delve any insight out of them. What are people missing? And it's really an amazing thing if you think about the fact that there's all these Wall Street analysts that are paid a lot of money to follow this company, and they were so wrong. So the reason why they had these great numbers was because they had to raise their prices. So numbers are great. Why? They had to raise their prices. Okay, sounds good. Why did they have to raise their prices? Because their input, or their, the corn stuff they feed the chickens, the prices have skyrocketed. So on the surface, it looked good, better earnings. But a little bit of a quick delve into the numbers was like, wait a second, these numbers are good, but they're good for the wrong reason. Okay. So we said to ourselves, there's a good chance that this thing comes back in. So not only did we get a trading idea out of this, and sure enough, I think we got in when we broke the 98 level here. If I remember right, I think that was the recommendation. Not only did we get into a profitable trade here, it also gave us insight on, wait a second, man. This is, what are we now? May 3rd. This is February, March, April, May, 3 months ago. Okay. People weren't really talking about inflation then the way they are now, although we were in our class. So not only does this give us a trading idea because it's, jacked up for what's not really a good reason, it also told us, wait a second, this inflation thing is, pretty prevalent or pretty significant. So we got a trading idea, but we also got more of a thematic idea. You know what I mean? In addition, that inflation is really, cooking. So this is early February, and I showed you guys this ETF before that tracks commodities prices. So early February, we started talking about, maybe we should buy this. And a bunch of the students I know bought it. I don't think this is a trade thing. I think this is something you buy and you kind of put away. And if inflation, keeps going on, it's going to keep going higher. But by looking at those Tyson numbers, and believe me, it wasn't like, we weren't like trying to reinvent the wheel. It was basically, we spent about half an hour going through the numbers. I was like, whoa, how did everyone miss this? So we have a stock that's jacked up for the, not a good reason, which it took a few days for the street to understand. So we got a trading idea, but we also got this theme of, oh, wow, this is inflationary. We should start looking at some, inflation ideas. So by taking a quick look at the numbers of one company, Rodrigo, not only were we able to come up with like a trading idea, we were also able to, put that into like a theme of, oh, there's this theme of rising inflation. And, just kind of getting away from that a little bit, Eric, once again, we see important levels, right? It's not a coincidence that this is where Tyson ran into resistance. It ran into resistance here because it was resistance back here.
And this is part of the full analysis that you do. Like, for example, when you're talking about a stock or a setup, or somebody's asking you, hey, Mark, can you look at this? What do you think about that? I think it's helpful to have that direct, immediate. So we've gone over several topics, trade ideas from the trading school. We've gone over a little bit on Pro, which is included. We showed you guys everything, where to find the recordings, where to find the live trading chat rooms there with Mark and everything. Maybe it's time we take some tickers from the chat, Mark. You think, or is there anything
sure.
that you want to cover?
No, let's take some tickers.
All right, so roll the tickers, guys, in the chat, and we can start picking a few there.
But what I'd like to see, well, I can't see the chat right now. But let's see if people will say like do you see like what do you think is a support or resistance level on a particular stock? Like not just what I think, but if you say, Mark, is this a resistance level? Is this a support level? I think it's a little bit more instructive. But yeah, man, fire away. Let me know what you got.
All right. So, well, in the meantime, right, while the folks, pecker some trades there for us, let's go over Tesla in the meantime.
All right. So Tesla is an interesting thing here, right? And I'm going to explain why we were talking about selling Tesla when it was up here. Now, momentum, what I mentioned before is if something is, every stock has like a typical trading range, right? Or a historic or characteristic trading range. If something gets jacked up above that, we call that overbought. And why do we care? Well, because things that are overbought tend to reverse. So look at this here. This indicator, this bottom half of this chart, chart here, is something that measures momentum. So this here, when this blue line is above this red line, it tells us it's overbought. So now look at this. We're going to scroll back in history here. Take a walk back through time. Where were you in 2011, 2012? Where were you, Rodrigo? So November of 2010. Anyway,
yeah.
Where are you, my young friend?
Senior in high school for a long while.
All right. Okay. Well, whatever, man. I was young once too. But anyway, what do we see here? Look at this. This is the most overbought reading in this company's history, occurred in October. So when you see something historic, that's a sign. You know what I mean? So the most overbought in the history of the company. And sure enough, what did that tell us? That told us, hey, man, this thing is going to stop going higher. And, we formed some resistance there. We hit resistance there. So now the question is, where do we go next? And I don't know. I mean, I would say we're probably looking kind of neutral here. I'd probably wait for something. But let's go back to our whole talk about gaps, right? Gaps are fast moves. Fast move up, fast move down. It's not a gap by, your traditional definition, but it's the same concept. If something moves through levels really quickly, there's not going to be the people selling that become remorseful that try to buy it back. So fast move up, fast move down. Now, from a shorter term point of view, this looks like it could be setting up for a pop higher because remember, fast move down, potential fast move up. And we're testing this short-term resistance here, I would say around I don't know, I'm going to just say 905. So, this is something I would probably be looking at for a potential trade idea. I mean, I think the market is probably going to go down tomorrow after the Fed. But like I said, I don't know. I'm going to let the market tell me what to do. If the market starts to rally, there's a really good chance that Tesla breaks this short-term resistance level and makes a big move higher. So we're at 905, or we closed at 9, let's just call it 910. As a trader, I'm not saying where this is going to be in 5 or 10 years, Rodrigo. I'm just saying as a trader, fast move up, fast move down, potential fast move up. If the market holds and firms up, this could probably move from 905 to 975 pretty quickly. And then I would suspect it would hit some resistance because it was a support level and support can become resistance. So, the breaking of a short-term support level here, resistance level, fast move down, maybe a fast move up. I would say that this looks like a potential trade on the long side if this short-term resistance gets broken.
If it doesn't hold, that because Tesla is one of the big ones, right? So you would put him up there. If this falls, then I'm assuming the market's going to be red. Like if Tesla's deep in the red, I think the market would be deep in the red, right?
Not definitely, but it would certainly weigh on it. So Tesla is in this sector here. This is the consumer discretionary. So if Tesla starts to go lower, that's going to pull this whole sector down with it. It's the biggest company in this sector. So because of the way these ETFs work, all these companies kind of trade in the same direction, more so than they used to, say, 30, 40 years ago. Because if an ETF gets pummeled, eventually all the stocks that are in it are going to come down as well. So this is going to be another thing to watch here that's really important. In addition to Microsoft and Apple sitting on those support levels, we have this sector sitting on a support level. Consumer discretionary, I believe, is the third biggest sector after technology and healthcare. So if this starts to give way, you know, if Tesla can't make that short-term break higher and this starts to give way, that's definitely going to be a bearish thing for the market, right, Rigo?
Yeah, and speaking of this guy Musk, so he was going to take Twitter private. I'm just reading right now, breaking news: Musk plans to take Twitter public again. This guy is such a genius, brother. It's beyond me. So let's look at Twitter really quick for the sake of this stuff. This just came out.
All right. Well, it's not really moving, but as of right now, it's I guess the news hasn't really rolled over into it. But you know, that's what's great about Elon Musk is like he makes you think, because it's like, gee, you know, this guy's saying this, and you know, people might think, oh, that's what he means, but it's like he's a smart guy. So
He's running. He's like playing on the line with the SEC. He's like dancing with them almost. Sometimes it feels.
oh, he's awesome, man. He's great.
Yeah.
And you know, I mean, they want to bring him in front of Congress, and I hope they do, because he is just going to make them all look like such idiots. You know,
Yeah.
It's like, hey, this dude is rich. He wants to buy a company. Big, you know, that's what America's supposed to be all about, you know.
Right.
And I think he just, you know, Twitter clearly had an agenda by censoring a lot of things. And I think even though Musk might not agree with those things, he thinks that, hey, man, the foundation of a free society is having free speech. And maybe because he's not American, he's South African, he appreciates America more than people that were born here. And I find that a lot. I mean, I have a lot of friends that are immigrants and so forth, and it's like they appreciate, you know, the United States more than people that were born here. But
Right.
anyway, I think it's great. And I hope he gets into some really good Twitter battles with other people.
Definitely, man. I'm looking forward to that. And Airbnb just reported, it looks like they 102 million. So they have Airbnb bookings top 100 million for the first time.
What's their symbol?
ABNB. It's like 2 hours ago though.
All right, let's see what's going on with these guys. All right, so it's trading like right here. So, you know, to me, this looks kind of neutral, right? You might have to wait and see, but, you know, just going to our technicals or our fundamentals, here we have a clear support level. You know, we have up here, we have a clear resistance level. So you're probably saying, all right, Mark, well, gee, that's just great. Big deal. What am I supposed to do with it? Well, just pretend we were back. Actually, let's just not even pretend. Let's go right to now. So Airbnb is trading up a little bit on this news. Now, you know, 7 o'clock, it's probably not that much volume. You know, tomorrow could look very different. Just say Airbnb starts to go lower and it starts to get close to this level down here around 132, 133. I would be looking at this for a potential bounce. When it got here, it bounced. When it got here, it bounced. So we have a clear level of support. You know, when things get to clear levels of support, if they're oversold, which Airbnb would be if it got there tomorrow, there could be a potential bounce. So just by looking at these levels, like let's talk about like a watch list. Okay. A watch list is, in my opinion, well, there's two kinds of watch lists. I have a watch list of everything I look at. Like, for example, every day I'm going to look at oil or natural gas. Doesn't mean I'm going to trade them, but I'm just going to look at them to get kind of insight into the market. Maybe we get trading ideas from it, maybe not, but we should always know what oil is doing. A watch list A trading watch list should be stocks that look like they're poised to move. Okay. In the trading models, generally, we have what we call a setup. That's pretend you're in a race when they say, get ready, get set. You get ready, you get set. What could be a setup? Something's oversold, it's at support, something's overbought, it's at resistance. The stocks on your trading watch list should be stocks that look like they are maybe about to make an imminent move. Okay. It doesn't mean that you're going to trade them. You're going to watch them. That's why we call it a watch list. Now, what is it that makes you actually get into the trade? We call that the trigger. So say in theory, Airbnb tomorrow gets down here, it's oversold and it's at resistance. Let's just pretend that tomorrow looks like this. Okay, so we're oversold, we're at resistance. I mean, it would be red, so I guess I'll make that red. This is your setup, okay? What could possibly be your trigger? Well, if we start to reverse off of this level, we get down to 133 and then say we get up to 138. It shows you a reversal is going on. So the trading watch list, Rodrigo, is stuff that is set up, stuff that looks like it may move. Doesn't mean it's going to.
Right.
But, you might have 20 names on your watch list and maybe only 2 of them get triggered. Well, the fact that you're buying them, not just out of a random coincidence, you're buying them because you have a valid reason, like, oh, it's oversold and at support, or it's breaking out. That's going to put the odds in your favor much more than if you're just guessing or buying because, someone in some chat room somewhere said something.
Right. And so I'm reading a couple things about banks. I know that you're covered JP Morgan, but some people out there are trying to make a bullish case for for some banks. What is your take on the financials, considering everything with the Fed, with the rates?
Well, they're just saying that because rates are going up, but that's kind of, that's just kind of, I mean, I don't know. I don't think that's right. I mean, like this run up here was because, inflation, interest rates are going up, banks do better. The perception is, and I guess it's not a perception, but if rates get high or go higher, banks can make more money because they can lend at rates where that are higher, where you got to pay them back more. But if rates go too high, people will just stop borrowing. So it's good until it isn't. So I don't buy this that, it's just a general notion. Oh, interest rates are going up, banks will do better. I don't buy it. I mean, what does the chart tell you? I mean, if that was true, why would a JP Morgan have gone from 170 to 123 in like 3 months? You know what I mean? So
right.
A bad economy pretty much, there's some places that will do well, but for a bank, rising interest rates are good until they aren't. And one of the things that happened back here was that in the call, it became obvious that, rising rates benefited them, but rising salaries more than offset that. So rising inflation ended up being bad for JP Morgan. And obviously, you don't need to be a chart guru to see that in the stock.
Right. So let's look at XLP. I'm reading that some fund managers have seen some really high put buying activity on the XLP, Susquehanna, and some other folks.
Yeah, I mean, it makes sense because it's just like we talked about before, like, markets go down at different times. There's kind of this perception that, when a market goes down, everything goes down together, but markets go down in different sectors, go down at different times. Like if we go back to the internet bubble, the internet stocks or the technology stocks peaked in 2000. The financial stocks didn't peak until November, right? So there's a big disparity there. If we look at what's going on now, let's just use this as a kind of a poster child of the whole Reddit craze, right? All right. So this was kind of my thesis on last week's newsletter, where I had, the good, the bad, and the ugly. Well, ugly stuff goes down first, right? This was a Reddit superstar last year, but all the Reddit stocks really started crashing last May, June. Okay. So they started going down back then. The NASDAQ peaked in December. It started going down. So, we have our garbage stocks peak. Now we have our NASDAQ peak. Now what we're probably seeing is the peak of the consumer staples. So they go up at different times, right? Or they go down at different times. It doesn't happen all at once. So if people are saying, it's time to buy puts on XLP, I mean, that doesn't surprise me, that because we've been bearish on this as well. So that doesn't surprise me at all. But it's important to remember things go down at different times. Let me show you guys something that is kind of insightful, right? This particular ETF.
A quick shout out here to Jamie. Welcome to the trading school, Jamie. Let's go.
Man, I like that horn. All right, so let's look at this here. This particular ETF, it's the equal weighted. This means the 100 stocks that are in this all have equal weight. All right. Apple is probably the biggest company in this, and I don't know what the smallest company is, but they have equal influence upon this index. Whereas what I spoke about before, the S&P 500, you have two names that are 12%. In this particular index, every company is 1%. Notice where this peaked. November. Okay, November, this thing peaked. Now let's look at the S&P 500. And let's see where that peaked. This peaked in the end of December, early January. So that other ETF we just looked at peaked back here. So that was an early indicator that the market was going to go lower. Why is that? It's because of the way the indexes are constructed. The market really started to fall apart here. We have, a lot of stocks started to go down. But because Apple and Microsoft and, Google and the big data companies or whatever, because they have such a large weighting in the index, that those particular stocks could be going up, whereas the vast majority of the index could be going down. But if you look at the broad numbers, the S&P was up. The fact that Apple and Microsoft and a couple other companies are so big kind of masked the fact that the market was starting to fall apart. Because when the market's starting to fall apart and people are starting to sell stuff, what do? A lot of people think, all right, well, my stock's not working. Apple and Microsoft and whatever have been done so well over the last, few years. Let me just put my money into them. So because of that, those companies, the index didn't really show that things were starting to fall apart. So let me go. All right. So I'm sorry about that. All right. So anyway, so SPY peaked in early January, late December. This is 500 stocks, but Microsoft and Apple are the two biggest. The big data stuff is, is a massive amount of this, massive percentage of this. If we look at this, where every stock has an equal weight, this told us that, hey, a lot of stuff, maybe Apple and Microsoft are going up, but the vast majority of the market is going down. So it's important to understand that things go down at different times. Not everything falls apart at the same time. So this is why we started to get bearish back here. And one of the reasons why I continue to be bearish is because now we have the quote unquote, the flight to safety stuff, or the stuff that's supposed to be safer, is starting to fall apart, right? We just saw the technology stocks peaked in December. Staple stocks, if the market does continue to go lower, would have peaked in April. Your peak would have been right here, April 21st. So, technology peaked back here. Consumer staples peaked here fully 4 or 5 months later. Healthcare is also considered a flight to safety-ish type of thing. So this was the peak here of the market with the tech stocks, but where did healthcare, have its final peak? Also here in April. So say we go into a big market sell-off or whatever, and the market continues to trend lower, it's important to just think back and understand things move at different times, right? Tech peaked in December, potentially now we're here in May, and now consumer staples is peaking. So that, Rodrigo, is one of the reasons why I continue to be bearish, because it's like, the safest, most conservative stuff, like, the last people to the party, so to speak, now they're starting to go down. So this is like the final piece of the puzzle. The last stocks to go down in a market correction are the stuff that's considered safe, like staples. And now we can see this is starting to go down as well.
Right. No, interesting, interesting take there, Mark. So, we've covered a lot today, man. I know a lot of people have questions about joining the school, so we're gonna have a little short Q&A here. Mark, I know you have some stuff to do. I'm gonna stick around. I'll show them some of the trade ideas, alerts that you have on the school. I'll show them Benzinga Pro. Do you have any closing remarks here, not just on the market, but what you will be looking forward to in the school with the students, and why the folks should give it a shot here?
Well, I think that it's always a good time to join this trading school if you want to learn about the markets and investing. And it's not just trading, it's like investing. But now is an exceptionally good time because we have a lot of stuff that's going on. We have inflation for the first time in 4 decades, before Rodrigo was even born, back when I was in high school. We didn't even have inflation when I was in high school. But as traders, we want markets that are going to be moving. And I think over the next week or two, we're going to see some real movements. And, there's going to be some real chances to make some money over the next few weeks. This isn't like, it's July and the summer and nothing's going on. The markets are sleepy. This is like, we got inflation, we got consumer staples rolling over. We got the 2 biggest stocks in the market sitting on important support. It goes on and on and on. So I think now is probably a better time than typical to join, because there's just, the market now is primed to move. And as traders, that's what we look for. So I guess that's my final statement.
Interesting. Good stuff there, Mark. Well, I appreciate you. You appreciate the time you put into the trading school, all the effort helping the students. I guess we got to give you a proper shout out here, Mark Putrino, lead trader, Benzinga Trading School. Let's go. All right,
I love
Mark.
that. All right, Rodrigo, thanks, man. I appreciate it. And
Yeah,
thank you everyone for listening. And I hope to see you tomorrow morning.
Absolutely, dude. I'll see you in the school. I'm pumped about it. What class do we have tomorrow, by the way?
Tomorrow is where we talk about the macro aspect of looking at the markets. The stuff we were just talking about now, like, the different sectors, how they work at different times, how you can get insight into the broader market by looking at these different sectors. And then on Thursday, our class is how to build trading models, talking about various trading strategies. So hopefully we'll see a lot of new faces there tomorrow.
Definitely. I'll see you there in the school, Mark. Absolutely, man.
All right, bro. Have a good night.
All right, man. I'll see you there. And folks, for you guys that stayed here, congratulations. You guys are definitely going above and beyond. And for those of you that have used Pro or want to look into it, I'm going to go over a couple of things here with it, not just Pro, but a couple of things from the school. If anybody has questions, put them in the chat before we do go and just finish the stream here. This thing's going to be available till midnight, guys. So I'll make sure to at least try it out. Again, we're right now trading school. We're in the home page. You see right there, it says home. You click on it. This is where you go. Events for May 4th. So that would be tomorrow. So you have there the class for tomorrow. Market principles, analysis, and sentiment. Okay. Thursday, you can pop in, see what class you have. Friday, Monday, Tuesday, Wednesday, and so forth, right? There is an introductory video here if you need it on how to use this platform, but it's very straightforward. Everything is in the top right here. So whenever you do have the live class tomorrow, so for example, let's see, Wednesday, we have a class at 7 a.m. Eastern. You can pop it on your calendar, or you can just wait for the time to come and just make sure you're there when it starts. You can watch the class here on the homepage, but I really think you should go to we have a dedicated live page. It's a live room. We have a chart there. Let me take this off. Okay. So on the right, you're going to see this is a chat room, and it's only available when you're like actually in the class. This chat room is only open when you're in the live session. So you can see all the folks here talking, sharing trade ideas. You know, hey, Mark, good morning. Hey, have a good day. What do you think about this? All that stuff. It's just a conversation. You know, we're having conversations all day back and forth. So the live class will be playing there where you see that cover, and the chat would just be going there throughout the day. So that is the live when you click live. If you want to watch the recording, you go to video library and you can watch all the recordings there. This is the investment psychology class from today. And this is the Q&A session about the class. So you have the lesson itself, and then you have a Q&A and a recap. So two-part, overall 3 hours a day. And you have all the prior recordings there if you do want to check it out. A lot of people have issues with chart patterns. You have a class just for chart patterns. A lot of people have issues with momentum, with trends, analyzing trends, detecting trends, knowing when a trend began, when a trend begins and when a trend finishes. Levels, very important. And of course, the introduction and philosophy. A lot of folks are trading on information that really, I mean, look, when I started, I did the same. You know, I just went on YouTube, saw a couple videos, thought it was good to go. But your P&L knows better than me. And you should know better than that, right? So if you do have issues with trading, if you know there are some things you can improve on, especially those that have bigger accounts, maybe 5, 10, 20, 50,000 $1,000, you have a lot more to lose. So you should be a little bit more responsible. Make sure you do have some sort of foundation, some sort of education. I can tell you that the school, the trading school, is like when you build a building, right? And you have the foundation set. And if you have a weak foundation, that building's not going to hold up for earthquakes or hurricanes. And you kind of want to have the foundation to your trading to be solid. Just like any other career, you do want to build a solid career with a solid foundation, because that's what trading is. It's not gambling. It's a career. A lot of people do it full time. There's a whole industry for it. You know, it's not like we're throwing dices in a corner. So make sure you take the education seriously. It's very important. I can tell you that I talk to thousands of traders here, and it's always the same mistakes. It's always simple, easy mistakes that you could avoid if you're trading with a community that really you can trust. Honestly, especially when it comes to money. So everybody here is a real trader, is a real person, and you can see it in the chat. So this is the video library, folks. Let's see what else we got. We got the live chat rooms. This is the live trading rooms that I told you about. You have student trade ideas. That's where the students are posting their trade ideas, their research, all that stuff. Student plan project chat. I'm still not 100% sure what this is, but I do know they're kind of trying to create a trading system there. The students, again, extracurricular activities. We're all about it. Questions for Mark. If you cannot attend the session or the Q&A session, you do have that chat room where you can ask Mark any question at any point, even if you're not available to be live in the Q&A session. Mark's trade ideas, right? So if Mark's posting an entry, an exit, an update, you'll find it here. General discussions, community support, quizzes, tests, all that stuff. You have it there. We already showed you guys the chat room. The syllabus really quick here, guys. A lot of you guys already know what the chapters are, but in case you don't, these are the chapters. Introduction and philosophy, levels, trends, momentum, patterns, investment psychology, market principles, analysis and sentiment, investment strategies and trading systems. And there's a lot more packed that we can't just, throw in there a chapter for everything, but there's so many other things and nuances that you're going to learn that are just, we can't just make a full chapter for. Okay, so those are the chapters. Schedule. Monday to Thursday, it's the same schedule. From 7 to 7:45, you have the lesson lecture. 7:45 to 9, lesson Q&A, and 12 to 1, you have the lesson review. It's the same schedule every Monday to Thursday. Friday, you meet from 7 to 9 a.m. That's it. All right, so we covered that stuff. This is one of the weekly reviews that Mark, yes, that Mark Putrino, that Mark Putrino will be doing. So these reviews are done every Monday, I believe, and he goes over what he's going to be looking at towards that week. So Mark Putrino does this for you guys. This is a new addition that he just put in. So now let's move on to Pro, right? A couple things you can do here. I open the details tab. That's what I have open, and then I select chart, and that's where I am. And you can have different windows, right, for this stuff. So I have this window. I typically will do the overview first if I've never heard of a stock, and I'll just see what's happening here. Benzinga Pro is like, it's like the news dealer. I swear to God, they have news from everywhere. You'll go to different brokerages and you'll see they do not have certain news and certain stocks, and I don't know why, but I do know that Benzinga does have them, and it happens often where I'm looking at a stock in my brokerage, it's going up, there's no news for it in the brokerage, and I'm thinking, what is this? Is it a meme stock? Is it going up because of the sector it's in? You're confused. And then I go into Pro and I notice the news is there. So some of us are trading with incorrect data. We don't even know it, right? Also, these charts are second to second. So unlike other brokerages, they'll tell you it's real time. It's really not because it's so slow. With this, you have real time charts. So something to keep in mind if you're day trading or scalping, whatever. A quick explanation of what the company does. You can always find it on the bottom right. In this case, you see that this company, they do like seaborne transportation, including iron, coal, grain, steel, fertilizers. I mean, commodities in general. They do have some oil tankers. So you can get an idea. If you're trading really quick, you do want to be able to say, okay, what does this stock do? Okay, they're in that industry. Now, that's one thing I do. The next thing I do is I try to find their recent earnings. I want to know if this company is actually legit or if they're just running on dreams. So as a former, I've been doing finance for businesses for like 10 years. So I really can do like some due diligence with companies, and really with Pro, I can do the same level of due diligence that I would do before when I was at the bank trying to check, a business report or something. So because you get the actual sales so much more focused. And let me just show you what I'm talking about. Couple new charter agreements. Looks like, they're doing well, but I want to show you the earnings here. Because that's really once I know what the company, like what they do, I will go and look at their earnings and see really if they had a good earnings, if there's demand, what's happening with the company, if they have any debt, what are they doing for that debt, what are their cash levels. There's a lot of stuff that I'm looking at, right? So let's just read really quickly a couple highlights. So even though, right, you get the P&L and all that stuff, Benzinga Pro will provide you the highlights here and we'll mark them in green so that you know what you're looking at. So here we can see, just gonna glance over a couple things here. Revenues 60 million for 3 months. So Q4, 60 mil revenue Q4 2021 compared to 4.4 million Q4 2020. So it's a pretty big jump. Net income of 29 million for Q4 2021 compared to net loss of 0.8 million Q4 2020. EPS went from negative 6 cents in Q4 2020 to 18 cents Q4 2021. Let's see what else here we have. So for the whole year, they did 132 million in the year ending 2021 compared to 12 million for the year ending 2020. So that's like a 10x. That's like a 10x almost in revenues. And this is a total turnaround story. I mean, this company has done some good stuff there from what I'm seeing. Now, my only question is, what are they going to do with this $43 million they have on cash? I have a couple of theories. Maybe they could use it to either pay down some of the debt, even though they just restructured, or they can use it to input a dividend, which almost every company in this sector has a dividend and they don't. I know that they're only owned about 4% institutional wise. So it could be a good incentive to bring those institutions in because it's only owned 4%. And all this information, I got it in Benzinga Pro, just for you guys to know, right? You can also look at the short interest, short float, whatever it is that you're trying to find, you can get it on Pro. So you have all the news, earnings you can get here. If you dig deep in here, you're going to see that you'll find these articles that are like, 12 industrial stocks that you can buy. And it's like you get so many trade ideas everywhere you go, because I'm here and it's happened to me before where I go look at a stock and suddenly there's an article below and it's like, hey, check out these, like interested in this stock, check out these other three stocks. And then I've been able to find some good trade setups like that. And it's just because the content is there. All that stuff is there. All you have to do is do what you were already supposed to do, which is do the research on your platform. And that's why we add Pro, because we want to give you the education, but it's not fair to give you the education without the right tools so that you can maximize that value. So imagine giving somebody the education, but no tools. Imagine giving somebody the tools with no education. They kind of go together. And that's really why I'm such a big fan of the trading school. And I've seen some impressive results there. Cypher says it changed his life. Cypher, you paid your subscription in like the first 3 weeks or something like that. I think I still remember. You've always been an amazing student there, and you help out all the other guys. So, and that's beautiful when you see that. So, all right. So you can read all the news here. You can literally see everything that's happening in the stock. It looks like they signed up new charter agreements. That's, when they lease out a boat. So you can basically see here what's going on. Now, this stock started moving, my understanding is as soon as the earnings came out. So we pull out a chart, and this is really why I like to have the charts in Pro, right? I pull up a daily chart and you go right here and you see that right here, this is when the earnings came out. Okay. So these earnings came out here when it was like $1.20. Right now it's at 212 around there, somewhere around there, right? So these price channels, again, everything in Benzinga Pro, you can put a daily chart. I pulled up a weekly on this one as well. You can pull up a 1 hour, right? You would do 10 minutes, 5 minutes, 30 minutes, 1 hour, 2 hours, 4 hours. So you can pretty much spot trends within that. That whole switch I just made took like 6 seconds. But again, you can use this for day trading. You can use it for scalping, for long-term investing. You can do a whole lot of things here. Again, we're just using CTRM as an example, even though it looks like they do have some pretty good fundamentals there. Now, something else I want to show you guys is the scanner. It's pretty much a 24/7 scanner, if you will. And you can filter this by a couple things, right? Gainers, losers, after hours, regular hours, market cap, price. This is golden. Like if you have Pro and you don't use this, like, come on, you need to give yourself a chance, right? But folks, that's just a little bit of what you can do in Pro. Cypher, seriously, the school paid itself off within 1 month. No joke. I made over 1K in 3 trades that paid off for the school that were ideas from our group. That's amazing, dude. That's what Mark was saying. People in the trading school, the students as well, they all help each other out. They all share ideas. And that's really amazing, honestly. I love seeing that. What's going on with LTHM? Earnings? So, I mean, this is really why I like the scanner. So right now, I just found out this company's up 18%. I don't know why, but I do know the ticker. From $21 to 26. What happened? What the hell happened? All right, let's go to overview. Let's try to do this live right now, baby. Let's go. Update Q1. Okay. Shares are trading higher after the company reported better than expected. Okay. All right. Guidance from okay, so they adjusted guidance from 160 to 200 mil to 290, 350 mil. Damn, that's a lot. And their sales. Okay. So yeah, you're getting the whole gist of this. Now, again, if you do want to pop into their conference call, you can do that. You can do that. I can show you here. Calendar, conference calls, 503. Y'all want to pop in there right now? We can ask a question. Maybe they can let me ask a question. All right. It's Rodrigo here from Benzinga. Hot Rod. No, I'm kidding. I'm not going to ask a question. But guys, if you do want to listen to the earnings call, if you do want to pop in here, literally, that's all you have to do. You go to your Pro.
Good afternoon.
You return to the price levels seen prior to this year in the next few years.
Okay, so I'm not going to go through all that stuff, but you know literally how easy it is for you to pop into this earnings call right now if you have Pro and have it there immediately access. Let's close this out there. I just wanted to show you how quick and you can do this stuff. Financials, very important. If a lot of you guys, if you're, I don't know, accountants or value traders, value investors, you do want to take a look at this. I always look at financials, even if it's not for a value investment or whatever. I'd like to know, if they can actually repay their obligations and things like that. So especially in this market, right? You cannot be buying stocks that are running on dreams. This is why you have a financials table here. So Cypher, I'm really happy for you. All you other folks here that joined, I really, really think you should try it. Cypher is going to be waiting for you on the other side. And Mark Putrino, more importantly. So again, folks, just to recap everything we've done here, we talked a lot about stocks and all that. But more importantly, we hope that this was able to help you kind of get a better understanding of the markets, of what's happening, what mistakes you could do, how to avoid them. And if you do feel that you do want to take it to the next level, if you do want to trade with a dedicated, like-minded community of retail traders and investors around the world, feel free to join our trading school. You do have a 7-day money-back guarantee. You'll have full access to all the trading school, recordings, Benzinga Pro, absolutely everything. And of course, Mark Putrino's live trading room and the live classes. So I think we covered everything, guys. Want to give a shout out to all you folks for being here. Thank you for bringing the energy, showing the love, the support. Shout out to the folks here. And with that, we're going to go ahead and wrap this session today. And I think it was a good one. I hope you guys join and try it out. Mark is really excited and pumped up about this week. There's a lot of volatility coming up in the markets, and you definitely want to be a part of it in a good way. So folks, without anything else here, have a great day. Stay safe. Enjoy your week. It's only Tuesday. We have a lot more days to trade here. And any questions, reach out. The contact will be in the chat. Thanks a lot, folks. And we'll see you guys next time.